Yeah, if we can just bring the mic closer so that we're clear.
Excellent. Is that good for sound? Great. Good afternoon, honorable members. With all protocols observed, on behalf of FNB, I'd like to thank you for this opportunity to engage. Okay, so in the audience, actually. So let me start by just introducing the FNB team. My name is Harry Callan. I'm the CEO of FNB, and I have with myself some senior members of my team. Given their CEO responsibilities, actually, they are the subject matter experts on many of the topics that I'll cover this afternoon. Just to introduce them, they're sitting in the audience. Latanya Johnson, she's the CEO of our personal banking. That means she's responsible for all the products and services to customers, ranging from entry-level earnings, and you can see we talked about the zero fee bank account, those earning up to 600,000 a year. That is, she's responsible for 7 million of the 10 million FNB customers in principle. But in Dispo Bata, she's actually the CEO of FNB Business Banking, part of commercial. She's responsible actually for small and medium-sized commercial customers. With business turnover, we define up to 60 million. We have Sipo Salinda with us as well. He's the CEO of our FNB Public Sector business, and he covers customers across the spectrum on public sector. We all serve together on the FNB Executive Committee. I also have Raymond Sogo with us. He's from First Rand, actually, and he's the Group Head of Regulatory Affairs. So I'll first take a moment just to explain how First Rand and FNB fits together. This is important. So while the presentation will actually cover mainly, and in fact only on First Rand for on FNB activities, the wider group context, it's what was actually submitted in the pre-read, and that is the licensed bank. So in essence, you've got the listed entity First Rand Limited. Okay, so that's the largest financial services group. We measure that in terms of the market capitalization, i.e. valuation of the bank on Africa. 80% of total First Rand's earnings comes from South Africa. Now, as I said, First Rand Bank is the licensed entity. We do enter the market with a multi-brand approach. So yes, but FNB, RMB, and Westbank. Now, FNB represents the retail and commercial activities. It includes the full spectrum: lending, payments, insurance, investments, gathering of savings from deposits. Westbank mainly represents financing activities, those and related services across customers across the segments, and that's more on asset-based financing and vehicle financing. And then RMB represents corporate and investment banking activities and the segment of the group. Now, FNB is representing the group today, given that the majority of the group's customers are served by FNB. So I'm just get Raymond, thank you for the help. And that is particularly individuals and businesses. Okay, so now just to start off in saying what is the purpose of what First Rand stands for? So back in 2019, that's about 6 years ago, First Rand adopted a core strategy. And the strategy is the purpose of delivering shared prosperity to a broader set of stakeholders. Now, you ask, what does that mean? The strategy implies actually leveraging our core capabilities as financial services with a much more intentional drive for positive outcomes for society, whilst we still continue to deliver value to all stakeholders, such as our shareholders as well. This is fully supported through various mechanisms: capital allocation, pricing, funding, lending strategies, some of which I'll cover today on some of the particular products. In addition, First Rand also works with the DFIs in order to improve the offerings and largely offer lower interest rates, or actually allow the capability of bringing more people into the net in terms of some of the lending products. First Rand has also created 3 particular foundations which provide grant funding across the areas that includes education, that's bursaries, training, etc., first jobs, agriculture, capacity building, youth training employment, gender-based violence and femicide, building and thriving, communities, and we'll talk about the community economy a bit later. Now, I am constrained in terms of keeping to data that's available in the market set. So all you will see data here is actually up to June 2024. It is fully available in the public websites. And I think that's fair in terms of just making sure equalization of information. So now at June, through those three foundations, we have donation commitments outstanding to be paid of just over $1 billion. That's 1.1 billion commitments as of June. Now, the foundations have donated up to June already. So that was cash flown out of the door of nearly 2 billion rand, of which just last year, so that's over the 5 years, 2 billion rand over 5 years, just last year alone, it amounted to 600 million grant money donations. And we do believe that 600 million will continually grow annually. Any of the honorable members that require additional detail on this, it is available on the First Rand website under our corporate social investing report, and gives you how the mechanism works to be able to create that donations. Okay, this is still shared prosperity summary for First Rand. I don't intend to cover through every one of this. It gives you a snapshot of the inclusive value created by the entire portfolio of First Rand Group and the specific financing, transaction activities specifically tracked. So these are the ones we tracked for our shared prosperity strategy. Some of these I will cover in the detail that we got on the slides. Banks, as you know, are trusted with the nation's savings. FNB alone manages 1 trillion rand of South African depositors' money. And that's looking after what we all internally call, we look after other people's money. We're passionate about home ownership in particular, which is currently represents an outstanding total funding of just over 270 billion, of which 22 billion alone is affordable housing loans. Over 160 billion has been lent to commercial customers, 44 billion of that to support the agriculture sector, nearly 50 billion to women-led businesses. Now, sustainable financing and accelerated transition is mainly actually facilitated through our corporate investment bank, RMB, and I don't cover that in the presentation today. It was in the documents that we submitted. Now, what I'll show you is we're unpacking a big, broader picture. So before I dive into the FNB details, take a moment just to explain FNB's approach to the committee's request. Definition of development finance, and I think that was covered during the period as well, is quite limited under NCA. So in order to present a more relevant and a holistic picture, what FNB finances is what you see here. It is not contained within the definition in itself. Our regulator, the NCR, working with the sector actively on this, together with many other topics. Okay, so getting straight into FNB. We serve 10 million customers. That's 10 million active customers at June. Retail is about 8.6 million customers. Of these, 7 million as I said, 8.6 is retail, 7 million is what for customers earning up to 600,000. Within the segment, we cater for entry-level customers, as stated earlier on. Entry-level are those that earn under 20K a month. Keeps cutting, so I mustn't hold it. Okay, I will try and see. Told you subject matter experts, guys. Now, entry level is what we will look to say about financial inclusion. The rest of the presentation actually unpacks how these products lend themselves into the themes on the slides, and I'll cover that fully. Okay, let's start off with the biggest part of our book, actually, home ownership. Now, home ownership is essential for better living standards. We know that. And financial security for sure. FNB offers, as I said, affordable housing products for low-income earners and communities to buy homes. As I said, that is fundamental to creating intergenerational wealth. Now, government subsidies are also available, and we certainly have integrated that in terms of our lending product sets and processes in particular to enhance affordability, and that's making more homes accessible to customers. FNB significantly contributed to reducing housing backlog in South Africa by actually financing a fair amount of newly developed housing units. And clearly, we support housing into the secondary market as well. And yes, housing, we do understand, also creates substantial job opportunities in the process. Financing of home loan. Now, that's going to be your cheapest interest rate product. It's cheaper given that the home is security, and that's in the event of customers that don't pay back our depositors' money. Now, having said that, customers are separately assessed for risk, and therefore interest rates, all intents and purposes, are tailored per individual customer. Now, based on how, now that will change according to affordability, how much deposit they add to the home, what is earning, how much it is, whether they're employed, self-employed, and I can go through a lot of detail, and I think you'll get bored by that. Not even all of the above actually taken into account. Some individuals still don't qualify for financing, largely due to the various factors that comes in for affordability. Okay, so I'll probably skip too many files. Okay, that sounds working. So we've also, as I said, that's your traditional financing approach to it. So affordability still remains the significant challenge in South Africa, with many unable to afford entry-level homes. Now, you can talk about inflation, you can talk about interest rates, you can talk about building costs. FNB is addressing some of these challenges by utilizing the government subsidy, that's FLIS, in trying to create the gap for in terms of affordability. And added to that, we also got a first home financing product. Now, that alone, by leveraging that product set, by taking 76 million of the FLIS money, we've been able to leverage at 76 to be able to put more 1,000 people into, in fact, 1,000 homes. That's 1.1 billion. Now, we've also created a product for collective buying. So buying that allows up to 12 people to buy a single home. And in 2014, we've advanced just over 300 million, 340 million actually. Now, as I mentioned, home ownership is crucial for building the household wealth. However, property held informally, and I think stated earlier as well, and not legalized, so it's not legally recognized, presents for low-income earners, households, significant issue to access traditional banking products. So FNB is partnering with various stakeholders to formalize the property title, unlocking significant value for those households, and boosting clearly the local economies. Now, we do know that mortgage loans sell much higher, so that value creation alone is created by just being ability to be having that registered titleship. And effectively, there's an equity lost by not having that in place in the first place. So put differently, we can facilitate title ownership. Value is created in ownership of the home in itself. Okay, so then getting into SME lending. Now, FNB recognizes that small and medium enterprises, and effectively micro, small, and medium enterprises, MSMEs, are fundamental and crucial to economic growth. Now, we are the largest SME lender in South Africa at 54 billion. Now, that's, as I said, the June number. FNB also offers other funding options, invoice financing, discounting, merchant cash advances, etc. around that. Black businesses growth funding focus on, and as defined, financing black-owned companies, and that effectively sits at 81 billion advanced to those individuals over, I think that's since 2020, so that's over 5 years. That's both combined RMB and FNB, so that is a group number. SME development, so to support SMEs, FNB offers a wide range of solutions, and this is actually also just helping businesses overcome some of the growth obstacles, clearly improving sustainability. Long-standing initiatives we have in place, alternative funding solutions, development programs tailored to different stages of businesses and sectors. The group also has created a Vumela fund, which provides growth finance to early stage SMEs. And the stats there is that effectively we still have under advancement, effectively what we delivered out to SME 700, just over 700 million debt and equity solutions given under Vumela. But clearly we've got bespoke development programs. We give non-development grant funding through innovative products around that, loans at preferential rates, and we can carry on around that. This table, though, does detail the success of FNB's focus intentionally using its procurement spend now. So in other words, question earlier on. So 25 billion over the last 5 years of our total spend went to effectively SMEs, 35 billion to Black-owned suppliers over the 5 years, and 23 billion alone to effectively Black woman-owned suppliers through the group's procurement spending capability. Okay, so question on DFIs. Now, we have effectively leveraged our relationship as a group to be able to raise 33 billion rand of DFI funding. And what you see on the screen is the categories in which we have to specifically provide. And yes, it comes with lots of reporting obligations, and you got to make sure it goes in the right places as defined by them. But now, of that, 25 billion have actually been deployed over the 33 billion. So we partner with various institutions, and that effectively allows us to enhance our balance sheet capacity to further actually increase lending at preferential interest rates, and where appropriate, actually, for risk sharing. So it's not just on the cheaper funding side, risk sharing around some of the projects, clearly having that natural impact into society. Now, as I said, we've already funded out 25 billion. Now, we also, at the same time, through the GFIs, facilitate non-financing piece of it. So effectively guarantees, 2 of them are listed there, 160 million for emerging farmers. That's where they don't have collateral for the land. So effectively, FNB is covered for the risk around the lack of collateral through the DFI guarantees, and similarly, 190 million of guarantees for SME or MSME lending. Transformational agriculture, we do know the cruciality of food, so I don't have to belabor that point. Now, given its significant contribution, clearly, we have to focus on that specifically if you're really talking about shared prosperity as well. So commercial, now, at the same time, we recognize that commercial farming sector largely remains untransformed. So the emerging farmers have limited access to resources such as land, investment capital to build prospective assets. Now, FNB is committed to supporting this transformation in the agriculture sector by creating a larger base of Black commercial farmers. We collaborate actually with large commercial farmers, commodity organizations, industry leaders, and government institutions to promote this financial inclusion piece and access to funding for these emerging farmers. Now, FNB Agriculture Solution helps, as I said, commercial farmers engage on this transformation initiatives. Now, for example, FNB's lending to Black-owned companies in the agri sector alone has grown over the years. Now, the significant deployment through multiple structures, BEE structures as well, you will notice the balance sheet. The value outstanding at June 24 is lower. You can understand that given the impact of effectively drought and commodity prices that you experience in 12 months to June. Women in business, now key to socioeconomic growth for sure. We support these through various funding and resource initiatives. At June, we have lent 50 billion to women-owned businesses, serving roughly 229,000 customers. Now, we also provide these customers access through various markets, digital platform, events, creating networking opportunities among themselves and across this community, financial literature, financial education, development programs, etc. And there's a detailed list in the document on that. Community economy now, SMEs, we do know, in township and rural areas, and what we define as community economy, aren't officially registered. Many of them are not registered. And clearly, as stated earlier as well, mainly use cash. So that does, without a doubt, limit access to banking products. So we've actually got a dedicated team to support these businesses in their community economies with financial and, more importantly, non-financial solutions, aiming to improve their financial inclusion, independence, growth, which clearly helps the economy's livelihoods, success, creating jobs. Now, we use those market insights as local market insights to clearly also define where our branches are located, and most of our new branches that we have opened in the last 5 years has been in these townships. We currently focus, and our FNB focus also is enhancing services, regional support, aligning products to the community economy. The initiative expands across more communities, extending the financial services net. Right, so financial inclusion. So the FNB e-wallet transactional channel has been highly successful enabler for financial inclusion for the unbanked and underbanked. Now, it allows FNB customers to send money to anyone, even though they don't have a bank account, have a bank account, and it is safe and convenient. Now, at June, total active e-wallet customers was 8.2. Just for reference, total FNB banked customers was also 8.6 million customers. So you can get a feel as to the e-wallet customer base of 8.2, and only 1.8 of those 8.2 million e-wallets that are active are actual FNB customers, as you would define them as active customers. The send volume is about 69 million transactions over the 12 months. The rand value of that is 42 billion rand of value transmitted through these e-wallets. Customers can cash out these at ATMs, retailers, etc. So we try and make it as easy for them to cash out. We have a zero monthly paying account, Easy Zero, that serves about 1.3 million customers. 57 of those 1.3 million customers are female, and 20% of those are actually just recipients of grant money. So customers can open these accounts using their phones actually, or they can clearly go to a branch if they choose to do so as well. Now, we've disclosed this annually across our financials. Over the last 5 years, we've looked at specifically to givebacks as reductions, and that amounted to about 2.7 billion for the last 5 years. Now, before I conclude, although not specifically asked in terms of the requested, I'd like to cover just some of the transformation scorecard information. Yes, FirstRand is a level 1 contributor at a score of 124. Black economic shareholding, FirstRand is nearly 36%. That's receiving over 8.3 billion rand of dividends in the last 12 months. The bank is a significant contributor to tax collection in South Africa. We have detailed transformation of our management teams over the last 10 years, just to cover a couple of it. Percentages sometimes actually do not give the full context. So what you'll see is I've actually given actual headcount numbers. So what we've disclosed is actual, so black senior management increased from 480 people 10 years ago to 1,280. Middle management from 5,100 to 11,700, and junior management from 9,600 to 12,700. Now, work is never done, and I've added the last slide just to conclude on work is never done. Right, so this is concluding the stats, and I've got one more slide, Chair, and then I'm done. Just want to bring everything together to bring the relevant data over the various slides presented. On the left, you'll see is 86 billion funding over the last 5 years to black business growth funding. On the procurement spend, I've covered some of those. We do believe that we have made substantial progress. 270 billion home financing, putting people at home, 22 billion on affordable housing. On interest rates, we follow a risk-based approach, tailored, as I said, to individual customer profile. 44 billion provided to agriculture business, 54 billion to SMEs, 50 billion to women-led businesses. I haven't covered specifically, and I want to state it, that we also provide funding to government. That's 300 billion, or just about 300 billion through bonds and T-bills. And the group has spent over 2 billion on various programs over the last 5 years in terms of education. And lastly, you would see I'll conclude is that we are very proud of our FNB e-wallet success. And then the last slide to say, okay, we do want to do more. So I picked up on 3 particular themes. NTA rules. NTA only applies to juristic customers where annual turnover is less than 1 million. That number has been stagnant since 2017. Small loans and credit granted to customers earning below a certain income threshold. That's what it's relevant to, and it's complex requirements for lower end market. Clearly, we need to just facilitate that, and the regulator is fully aware of that. Home ownership, addressing subsidized backlog of public housing. We need to get to that. Revise affordable housing income threshold to be able to give more people and have bigger access to the FLISP. formalizing title deeds. I think don't have to say more than that. Facilitate a modern approach to property transactions, moving away from what we call wet ink. Every physical document to be wet inked. In this day and age, you can have facilitation of digitization of documents. And then clearly, friction cost on home loans is significant. Yes, titled, one. Transfer duty, two. Now, there's always a debate. That's a value to fiscus. But if you effectively do that properly, you could land up having a bigger volume that goes through the system that actually still compensate the fiscus for the loss, yet effectively putting more people into homes and doing a much quicker turnaround. Financial inclusion, we've had lots of discussions with National Treasury, with SARS in particular as well, is that e-wallet, there's currently limitations on sending money, and we do need differentiated KYC to be able to have that access to more people to bring them into the inclusion. Entry bank accounts, also differentiated KYC we require, and thresholds to be able to do that, so you can still manage within that. FETCA CRS, we're working with SARS effectively on this lovely thing called foreign indicia. That is a limitation to individuals when you ask actually the question in itself. In Department of Home Affairs, clearly we've got lots of foreign nationals in place. Yes, we can do a lot on digital ID, but if we don't even solve around how we got access to people in here, is effectively then you exclude even further people physically on the ground in the country. Chairs, thank you very much. Appreciate the opportunity.
Thank you very much. I gave you extra 3 minutes
Very much appreciated.
because there was a bit of time. We'll now go to Investec. Not at all. Investec.
Good afternoon, chairpersons, and thank you for the opportunity to address you this afternoon, and also to honourable members of the committee, as well as my colleagues from the representative banks, the regulators, the FSCA and BOSA. We thank you for this opportunity to address you this afternoon, and I think some of the discussion would be, firstly, not necessarily to go through the detail of every slide, but to share the overall thematics and where Investec is positioned. I think from our perspective, looking at the business of Investec, Investec is we are defined and regard ourselves as a specialist bank and wealth manager listed across two key geographies. One, South Africa, where we are listed on the Johannesburg Stock Exchange, and the second, our presence in the United Kingdom and a listing on the London Stock Exchange. So our positioning in the market space and the role that we play is somewhat different, given our international position as well as the structure of our business and our business model. So I'd like to take you through some of the detail of that. But I think before getting into the business model and where we differentiate ourselves, it would be apposite to say that we have an unwavering commitment to our purpose, our values, core philosophies, and our culture. We see ourselves as a distinctly South African business that has grown an international footprint. Last year, we celebrated our 50th anniversary of the founding of Investec in South Africa. In the context of our role in society as a bank, we acknowledge our legal, moral, and social responsibilities to promote inclusive economic growth and transformation within South Africa. Our obligations are enshrined in the Financial Sector Charter, as well as which ensures contributions to a stable financial sector and minimizes losses arising from financial crises and bank failures. Similarly, our obligation arises from the way we define our purpose. The banking industry, as we all are aware, operates under strict regulations designed to ensure financial stability, including safeguarding deposits and preventing disproportionate impacts on society from financial losses. Investec's credit practices are characterized by fairness, transparency, and strict adherence to regulatory requirements, ensuring compliance with laws that mandate non-discriminatory lending practices. Question of race does not enter the debate from a credit perspective from Investec's approach to granting credit. Now, in terms of the first question that has really been raised has been around development finance. And I think one of my colleagues from one of the other banks had defined it as is defined in the National Credit Act, which is now set up on the screen. And that's a very narrow definition. And it's referred, examples of development finance are referred to as, or development credit is referred to as educational loans, small business development loans, low income housing loans. It's important as we look at that, to look at how Investec's differentiated business model applies. Our business model, as I said at the outset, is that we are dedicated to serving a niche market segments where we can effectively compete and deliver substantial value. Our vision is to create enduring worth, and it's intrinsically linked to the sustainability of the economy. From that perspective, our business model is not a business model of a retail or commercial bank in the ordinary sense. We do not operate a branch network. So when we look at the strict definition of development finance products, those fall outside the scope of Investec's business model. Notwithstanding that definition, though, we look at our strategy and our strategy revolves around harnessing the expertise that we have across our diverse business units to identify opportunities that maximize impact. We view medium and large businesses as critical drivers of inclusive economic growth, representing key opportunities for South Africa. So our approach to sustainable community investment is focused on 4 key pillars: education, learnerships, entrepreneurship, and job creation. Through these initiatives, we aim to contribute meaningfully to the broader economic landscape. I've touched on some of Investec's positioning and our approach to purpose has really been a journey around creating enduring worth. For us, we've partnered for the long term, guided by our purpose. We invest in transformational growth for our people, clients, shareholders, communities that we operate in, and the planet. Investec is a leading international bank and wealth manager operating in the 2 core geographies that I mentioned. We have a history and a heritage in private banking, corporate and investment banking, property activities, and wealth and investment. We have relevance and scale in the markets we operate and an ability to generate profit to advance our purpose. We serve selected niches where we believe we can compete effectively through market-leading specialist client franchises on a differentiated basis. From that perspective, we look at where our distinction is and how we regard ourselves as a people-backed business with a deep entrepreneurial culture. And we're supported by a highly differentiated client-centric and what we would consider out of the ordinary approach. Part of this is the way we're structured, which allows us to be nimble, flexible, and innovative. In looking at a snapshot of our business, we look at our total number of South African employees at just on 5,400. Of these employees, over 64%, which includes learnerships, are Black or ACI candidates. Taking a quick snapshot of our net core loans, and we'll take you through a slide which also does a comparison to the broader market. Our net core loans and advances, and the data point that we've used given results and the regulatory requirements around our financial year end of March, the data point that we've used for these actual financial statements is September 24. Our customer deposits is just over 434 billion rand. Our total funds under management in our wealth business is just under 500 billion rand. We've set out a structure of our business below, which I won't take you into the detail of, but it really is to serve to distinguish our business model, not being a retail franchise, not being a broad commercial bank, and focusing distinctive market segments. Just a quick overview, and I won't belabor this slide, it's just a number of the sectors that we operate in across the broad commercial space. And I think that gives you a good sense of where we're positioned in and the sectors that we operate in. I've touched on some of the model and why we're different from the commercial banks. And it's really a choice of how our business model has been structured and how we believe where we can add value-adding businesses focused on serving the needs of selected market niches, which allows us to compete effectively and build scale and relevance in very niche markets. Our approach is what we generally refer to as being high touch and high tech. We do not operate the traditional retail branch network that I mentioned, and our clients have access to bankers, private bankers, business bankers, a 24/7 global client support center, as well as digital and online channels to support the operating model. When we look at our opportunity from a South African perspective, we look at the fact that we've also got an international footprint and that we are able to leverage that international footprint to further the interests of South Africa Inc. A couple of those examples are, excuse me, hosting the Investec CEO conference annually in London, giving South African listed businesses and CEOs exposure to broad international finance markets. Second is hosting a breakfast at the World Bank IMF annually and showcasing South African businesses to close to 150 international banks and South African banks to the same counterparty market. Similarly, we play a significant role in the London Investment Week, which again showcases South Africa and allows us to present a shop front of South Africa to a broad international market. I think the purpose of this slide is really to show you Investec in the context of the competitive environment and the size of our loans and advances book, the size of our customer deposits, the number of active clients, which is something I want to pause on in a moment, as well as the total assets. Now, if you look at the total number of private clients, we operate a small niche private bank and have a core client base of 115,000 clients. In respect of the broader market, you've heard from many of the other banks in the financial system that play a much broader role in terms of client segment, which is a very different approach to our business model. I will also return to some of that in greater detail. I think similarly, the question that was raised was around availability of credit for productive purchases relative to credit for consumption purposes. We do not have a significant unsecured lending book. The nature of our credit is defined, and I'll just show you, this is a snapshot across our various lending books, which is the lending that we have dispensed across different segments into the SA market. You will notice that our what we call consumption credit, which is really around installment sales, motor vehicles, etc., and credit cards, is just under 10 billion rand. The majority of our credit at 337 billion rand is what we would refer to as productive credit, and across areas from going all the way from aviation finance to commercial real estate to mortgages. I'll also just touch on the question raised around partnerships with the development finance institutions, and particularly what was referenced was the IDC and the NEF. Specifically in respect of the IDC, we've had a long-standing relationship with the IDC. We've worked with the IDC and partnered with them across a number of transactions. Particularly, we've had a long-standing relationship from a treasury perspective. We have funded alongside the IDC in numerous transactions involving both energy and infrastructure. Similarly, we've referred transactions to the IDC to support the IDC and also engage across the full capital stack. Our collaboration spans various industries that align with our strategic appetite and which in our mind facilitates broad economic participation. We do not have a relationship with the NEF, and there's a very limited strategic overlap between the NEF client base and our designated client base. Similarly, I think what would be important to point out here is that we have a long-standing relationship with the PRC, who is also our largest shareholder, as well as the Development Bank of South Africa, where we have had a long-standing relationship. So there are other DFIs that we have a significant relationship with and hold current transactions in good stead with them. Given the distinction of our business model and how we position, I think the question that would be raised is, how do we utilize our business to drive economic transformation in the broader context of SA? And I think the first thing to note is that Investec is a level 1 BEE contributor. Secondly, over the last 5 years, we have advanced on average per year 7 billion rand of loans to Black-owned businesses. We've invested over 200 million rand of direct equity in small Black-owned businesses. And our procurement, over 40% of our procurement spend is to Black-owned and Black women-owned businesses. We look at how we could play a further role in terms of financial inclusion, and one of them is to use the payment rails, PayShap, to partner with non-bank institutions like telcos. And we've recently launched a partnership with one of the large telcos to support a mobile payment solution for their client base. As much as these clients may not necessarily be clients of Investec, we utilize our payment rail system to create financial inclusion through that. We've looked at a number of other partnerships, and we seek to reshape the digital payments landscape through enhanced financial inclusivity and how we can use these payment rails to actually effect that and connect people through a viable payment system. Similarly, when we look at sustainable finance, we look at 3 or 4 key areas. Chair, I won't go through each one of these, but I think it's just important as a reference point when we look at the strategic development goals. We look at the role that Investec has played as a joint mandated lead arranger in raising 2 billion rand in debt funding for a renewable energy project. Similarly, water and sanitation, Investec has provided a state-owned enterprise in South Africa, 1.7 billion rand term facility over 15 years to support water infrastructure. All of this goes to the point of how we utilize our ability in our balance sheet to support sustainable finance and economic growth in the country outside of our business model. We've also played a role as a lead arranger and lender in a 3.5 billion rand facility for a client's acquisition of 5,700 towers from a leading player in the telecom sector. There's similarly a number of other transactions of a similar vein where we've utilized our balance sheet and our capability to play a role in terms of sustainable finance. On the next slide is really an example of how we've been able to look at an opportunity to partner with Revigo Fund Managers, which is a majority Black-owned, enabling Black industrialists into the renewable sector to realize their investments. Investec's played a strategic role in creating Revigo, is an equity shareholder in this, and contributes to its funding over a period of time. Over the next 2 to 3 years, we believe we will have a fund with a value of 5 to 6 billion rand of renewable energy projects that have been underpinned by the role that Investec has played. And this also contributes to the growth and development of Black industrialists in that sector. Looking at our business as a whole and talking to a commitment to living in society and not off society, one of our key initiatives around corporate social responsibility has really been a key pillar has been education. A program that we've been very proud of is the ProMaths program, which was launched to school students, scholars, to support their mathematics training and ability and being able to unlock incredible opportunity from people who otherwise would not have had access to this level of learnership. And we've invested in that over the last 10 years, and over 20,000 students from disadvantaged backgrounds have been through the ProMaths program. Similarly, when we look at our bursary program over the last period of time, we have invested over 200 million rand in direct bursaries and totaling just over 565 bursary recipients. Many of those have gone on to play a significant role in the broader economy. We've also contributed to a startup school, just over 31 million rand. And one of the other initiatives that many of the other banks here are also playing a critical role in, where Investec played a role at the outset, was incubating and investing over 230 million rand in the YES Job Creation Initiative. Through that initiative, in total, 167,000 jobs have been created and just over 9.3 billion rand injected into the economy through those youth salaries. So again, a significant role in a different way to have a social impact. to date, Investec's placed over 4,000 of those interns into different roles across broader businesses. Similarly, we've invested outside of the YES program, we've invested just under 71 million rand in learnerships, and we in total are sponsoring we have over the last period sponsored over 510 learnerships. So I think that gives you a snapshot of the way we've positioned our business, the way we've played our broader role, and then looked at how we impact society in a very different way. Similarly, when we look at the EDT, which was the Initial Empowerment Trust, which formed part of Investec's empowerment transaction going back over 20 years ago, the trust is still sustainable, is still operating, and has played a significant role across different areas, both from an education perspective, water supply, supporting micro entrepreneurs, as well as the YES program. So this just gives you a sense of the enduring work that was created through the Entrepreneurship Development Trust, which is supported by Investec, which formed part of the original BEE transaction that was done. Similarly, when we look at our role in the country, I've touched on the fact that we play a role hosting the IMF breakfast, as well as a role to support government in hosting the G20 in the current year. So in December, we made our offices available together with many of our team to support the hosting of the deputies and Sherpa track at our offices at no additional cost to government, but to provide an international platform which will hopefully form part of a growth opportunity for SA Inc. I think in closing, we look at our role and we understand our role to play within the South African economy, a role of growth and transformation, and aligned to our purpose and values. Our contributions are aligned with the Financial Sector Charter, and we continue to support a stable financial sector and mitigate social impacts from financial crises. We adhere to stringent regulations, and we will always ensure fairness in our credit practices. By leveraging our expertise and collaborating across sectors, we aim to drive meaningful change that benefits all stakeholders. Thank you, Chair.
Thank you very much. At least we're trying to catch up with the time. We'll now request Investec, and the last presentation will be Standard Bank. Sorry? Investec is done. Nedbank. Sorry, Nedbank. Apologies. And Nedbank will be followed by Standard Bank. In the meantime, while we're connecting, in the interest of time, there is tea available. We can just slowly, one by one, just grab tea, come in, so that we don't stop working. At the back where there was a bit of something like lunch, that's where we can find tea. Over to you, Nedbank. Yeah. Your mic must be on there. Thank you.
Is that better? Yeah. Thanks, Honourable Chairperson, honourable members of both committees, all representatives of government, regulators, and the banking industry, and distinguished guests. And Chairperson, of course, with your guidance, I'll be summarising our presentation, and I won't be presenting every single slide, but of course, we'll take any questions afterwards. Listening to this morning's presentations and all of my peers presenting today, I thought I'd just remind us of the purpose of what we do. Nedbank takes that very seriously. We make a sacred promise. We do many things. We conduct all sorts of complicated banking activities. We lend money, we invest in financial markets, we trade in derivatives. We manage risk for clients, including our government. But at the core of it, we look after hard-working people's money. In other words, many hard-working South Africans receive a salary once a month and it's paid into a Nedbank bank account. We then promise them that at some uncertain future date or time, and in full, on demand, we will give them their money back with a fair return. Sometimes in an uncertain location. It may be very far from where that money was deposited. To conduct our other activities, such as lending and investing, together with a portion of our own capital. But we never forget that our primary responsibility and our sacred promise is to look after people's money carefully. I'm joined here today by my fellow executive directors of our group, Mfundo and Kuklu on my left, and Mark Davis on my right, who'll help with any questions later. We see ourselves as a responsible corporate financial citizen. We look forward to engaging your committees and others in this House to lend our expertise, in fact, and to collaborate to address the challenges and promising opportunities our country and its people face. We appreciate the invitation. Our participation aligns with our purpose-driven approach to leadership. And by highlighting that, I just wanted to point out that we lead in areas of providing finance, in fostering socio-economic transformation, and advancing industrialization in South Africa. We support businesses across various economic sectors, which is essential for stimulating investment and deepening meaningful and transformative economic participation in our economy. Our approach to lending and development finance transcends regulatory compliance, because we use that to provide our capital to unlock growth and foster innovation. Financial inclusion and access to capital are essentials for business, particularly those that can create jobs and contribute to economic resilience. And the pathway to all of this ranges from harnessing global economic geopolitical shifts, fostering local policy reforms, and these factors must be considered and addressed to create an environment conducive to investment. We heard of many challenges today, but one thing's for sure is that Nedbank is cautiously optimistic that there are promising opportunities that we as a country must seize in a manner that continues to protect and strengthen the underlying regulatory soundness of our banking and financial system, the integrity of our public finances, and enabling policy environment for encouraging and promoting entrepreneurship, trade, and investments. Just looking a few slides ahead, I thought I'd spend a minute or two just on our strategic focus areas, slide 3. And there we set out that our strategy is fundamentally about leveraging our financial expertise to create positive societal impacts. In other words, in principle, we believe that we use our financial expertise to do good. And we set out our strategic value drivers and the focus areas, and then we prioritize execution by concentrating on value creation for all of our stakeholders. We also commit to developing a world-class technology platform that supports all of these initiatives. Just skipping a few slides and looking at slide 7, I thought I'd focus for a minute on our lending philosophies, given the direction of questioning. So as a commercial bank, the lending principles we apply are, of course, subject to stringent regulatory and commercial requirements. Our bank does safeguard depositors' funds, ensures market competitive returns for funders, and contributes to a sound and stable system. And as a result, there are several laws and regulations that govern banking in general and our credit practices in particular. And these are all meant to ensure that we lend responsibly, remain adequately capitalized, and do not engage in any discriminatory or abusive practices. These measures collectively protect borrowers and uphold financial system integrity. Just looking at it in a little bit more detail, we note that all credit applications are assessed for the risk of potential default. Credit assessments are focused on borrowers' willingness to repay as well as their ability to repay. And to ensure that the ability to repay has a strong likelihood of being sustained, we also evaluate and update risks associated with source of repayments during durations of loans. Credit is granted to borrowers who demonstrate willingness and ability to repay, and as well as where volatility is manageable for the duration of loan. Loan portfolio qualities are periodically reported to the SARB, NCR, as well as independently reviewed by external auditors and market participants, including our wide investor base. Just looking at pricing philosophies on slide 9. Of course, there are maximum pricing charges promulgated in NCA or NCR regulations, and we adhere to those, of course, but we also want to point out that we adopt what we describe as fair model-based pricing, and we use that to determine borrower or transaction risk on an individual basis. So in other words, borrowers with a low risk of default are charged lower interest rates than those with higher risks of defaults. Initiation fees and monthly fees are linked to covering just operational aspects of granting and maintaining loans, and they don't differ by borrower and transaction risk. We also have a very clear strategy around marketing and communicating to our clients in a very transparent way, in a very cost-effective way, and a timely way that meets their needs. For individuals, for our clients in our retail bank, the biggest focus is on accessibility, simplicity, and flexibility of product. While for SMEs, the emphasis is more on personalized financing options, relationship banking, and partnerships. We also see our role as providing a focus on education. In other words, we're not just there to sell products. We're also there to educate, be easily accessible, and mindful of the impact that we have on society and the environment. Just a few minutes on development finance. Our approach to development finance demonstrates a strong commitment to supporting many sectors, promoting economic growth, and ensuring financial inclusion. We basically offer 3 development credit products that are aligned with the regulatory definitions, and these include student loans, taxi finance, and affordable housing. Each product has its own features, but we strive to remain competitive and responsible with every offering. In addition to those, we also offer an expanded suite of development finance solutions that are aimed at supporting small and medium enterprises. These solutions are more tailored, of course, to address working capital needs. These could be funds used for production, purchasing inventory, plugging cash gaps in operating cycles, and trade receivables and trade finance. Funding the acquisition of long-term assets of revenue-generating nature, such as yellow plants, property, and equipment, is also a key focus of ours. We're pleased to say that in MSME banking, in this last year, 2024, we were honored with 3 distinguished awards, all recognizing the extent of SME banking success that we've had. Looking at slide 14, of course, the important part is ensuring that we've got strong relationships with development funding institutions, or DFIs. And we're pleased to say that we've concluded a green bond recently that raised over R1 billion from the IFC for financing environmentally sustainable residential properties. We also had a further R1 billion funding to the IDC for financing Black industrialists and business development. So we've got a strong, long-standing commitment to development finance through direct lending. We obviously have many factors and goals that we attribute there, but the table highlights that it's a significant business for us, with about R5 billion directed towards DFIs and over R9 billion towards Black industrialists in the last decade. And this is crucial funding for fostering economic growth and empowerment within communities. The DFIs also have a process whereby we focus on capital preservation while meeting their development objectives. And we've got various methodologies in place to mitigate risk around that. But clearly our focus is to support financial stability and financial inclusion throughout that whole strategy. On the aspects of transformation and our governance structures, we view transformation as both a moral and a business imperative to remain relevant in the society in which we operate. From a business perspective, we recognize successful transformation of our organization, our sector, and our society is essential to surviving. It forms a key part of all of our governance structures, right from our board, group transformation, social and ethics committee, through to our ExCo and all of our operating structures. We've got a few slides there that set out our leadership structures and our various colleagues that lead various parts of our businesses. And we're really proud of our transformation credentials with respect to our leadership. On slide 23, we've got a 18-year view of our journey since the promulgation of the generic codes. And in fact, the Nedbank journey started even before those codes came into effect or before they were promulgated. So from 2016 to 2023, we've made consistent, strong progress, maintaining a level 1 rating for 6 consecutive years from 2018 to 2023. Prior to that, we were at a level 2 rating for 10 consecutive years. We've received multiple accolades, and our BE score has significantly improved from only 56 points in 2006 to 124 points in 2023, currently the highest amongst the peer group. Although we are noting the significant progress that we've made, we recognize that we have so much more to do as this journey progresses. On slide 20, I'm going to skip 25 and 26. I'm probably going to start closing, Chair, on slide 27. I guess the last part to highlight is the aspect of leadership capital. Many of these metrics aren't measured in the codes, and it relates much more to our focus on just doing the right thing. At an industry level, we actively participate in various discussions to advance transformation with key bodies such as the Banking Association, the Financial Sector Transformation Council. And internally, our brand must also evolve. Nedbank is committed to transforming not just our operations, but our corporate identity. The transformation is essential to maintaining our reputation as a forward-thinking, inclusive, socially responsible financial institution. The Nedbank Cup, for instance, has awarded over 200 million rand in prize money, and we've built 9 multi-purpose sports courts. We're very proud of our good work with the Youth Employment Service, which we pioneered. We've continued to play a leadership role in mitigating South Africa's youth unemployment. We recruited almost 2,800 YES participants in 2023, and by 2024, we will have provided approximately 13,500 YES work experience opportunities. I'm really proud that approximately 88% of these candidates come from grant recipient households and 91% have dependents. To date, Chair, 2/3 of these candidates have been women, and our absorption rate within Nedbank, in other words, the number of those folks that join our company, is about 70% at the moment. So we're really pleased that we're able to provide gainful, meaningful employment for those people. Slide 29 sets out our BE performance and underscores that. But just in closing, Chair, we just want to highlight that we're committed to purpose-led transformation. It extends beyond compliance for us. It's embedded in our strategy and business plans. Progress is diligently measured and tracked, and we're proud of the significant progress that we've made, with much still to do. Thanks, Chair. I'm going to conclude there.
Thank you so much. You're right on time, CEO. Much appreciated. And then we now get to the last presentation, Standard Bank. Then we will then have a deliberation by members, and then we'll answer some of the questions. Those that you cannot answer, we'll have at least 5 working days to answer in writing. And then we will then obviously go to the summary and way forward of the meeting. Over to you. Over to you, Mr. Fee.
It was starting to feel a bit lonely here. I'm glad that my colleague was joining me.
We must declare Mr. Fitler was our colleague in local government and our boss. Yeah. Thank you. Over to you.
Well, Honorable Chairperson and honorable members, ladies and gentlemen, I have my ex-core colleagues here with me today who will assist in dealing with some of the questions. And if we're unable to respond to all of them, we'll be more than happy to submit written responses to those questions that we've been unable to get to. As we often say at Standard Bank, it is not enough to be transformed. We must be transformative, which means that we have to play a role in continuing to contribute towards transformation and the development of the South African economy, and indeed the economies of the markets within which we operate. We hope that some of the ideas that will be shared today in this session will lay the foundation for further engagement and partnerships that will continue to contribute to ensure development finance, as well as increasing access to a number of South Africans. I was told sometimes that when you're trying to do a presentation and nothing happens, that the problem is usually between the computer and the chair, which suggests that it is the user. These slides highlight some of the key issues, in relation to what we thought would be useful just to sketch the picture of the role and the contribution that Standard Bank makes in the South African economy. We are an old institution, over 163 years. Some of that history, obviously, is not covered in glory, no sort of positive impact in terms of some of the discriminatory practices that existed in the past. But nonetheless, it is still the history of the institution, employing over 30,000 people with over 11 million customers whom we interact with in a number of ways through branches, ATMs, as well as through digital platforms. It is this contribution that covers a whole range of areas that we are proud of, and we are committed to continue to grow that contribution and make sure that it impacts various parts of the society, including our contribution to the tax base, the donation that we proudly make to the Democracy Support Program via the IEC to support political parties based on proportional representation to Parliament. And we do so knowing fully well some of the challenges that are faced, but we believe that vibrant democracy and well-funded political parties are essential to the future functioning of South Africa and its growth. When we speak about growth, we mean growth for development, that people have employment or income, but we also mean that that income must be able to contribute towards the creation of assets, as well as the generation of future value. It is within that context that our presentation reflects on various elements of Standard Bank contribution, the amount of lending that we give to government, our support for productive sectors of the economy, our investment in areas that are aimed at facilitating inclusive growth, the amount of investment that we make to give people access to houses, and as a sort of a byline, it is worth noting that 1 in 3 home loans in South Africa are granted via Standard Bank or its sort of subsidiary as a home loan. So we're a huge player in the provision of home loans in South Africa, and we continue to be proud of that involvement. We're also active in supporting SMMEs, emerging businesses, as well as suppliers to Standard Bank, and will continue to do so. I'm not going to reflect on the sort of our BE scorecard. It is encouraging, though, to note that every institution that is presented to this committee is at level 1. We regard that as foundational. What is required, though, is to use that base to explore different avenues through which we can continue to contribute towards the development of the South African economy, ensuring broader access, and ultimately ensuring that we're meaningful partners to government and to various players in the development of the South African population and the economy. If we reflect here on where does Standard Bank spend or allocate its asset, i.e. its loans, this slide reflects the split across the different sectors. And as can be seen on the sort of chart on the left-hand side of this slide, that it covers the broad spectrum of the economy, with a sizable chunk also being directed at individuals. And within that chunk, the biggest by far is our home loan sort of funding. The right-hand chart chair reflects then the split with regard to the different sort of client segments. We are proud that we continue to support government and various state institutions, not because we think we ought to support government for the sake of it, but government is critical to the development and the provision of both social and economic infrastructure, and therefore support to government and state-owned institutions is intended to enable the further expansion and provision of social and economic infrastructure. And it is something that we continue to investigate and look at additional potential ways through which we could partner with some of the state-owned entities. This is a very interesting slide, Chair, in that it reflects our contributions to the home loan space, and we've excluded home loans to the higher segment of the residential sort of market, because those people will get home loans irrespective of which financial institution that they go to. What is interesting, though, about this slide is the spike in our home loan origination that occurred between 2020 and 2021, and that was during the COVID years. And what this demonstrates is that even though the economy was facing economic hardship, households were struggling to get loans and to be financed by the financial sector, broadly speaking. Standard Bank did not retreat. And as a consequence of us not retreating in the home loan market, our market share spiked quite significantly. And post that, it then normalized as everyone else was coming back onto the market. And this underscores our commitment and our view that when we look at interacting with various segments of the market and our client base, broadly speaking, we tend to take a through the cycle view as to opposed to changing our credit policy on a spur of the moment, because we accept that there will be ups and downs in the economy. And ultimately, we have to look at the fundamentals and make sure that we do that which is right in the medium to long term for both the institution as well as for our client base. I thought, Chair, it would be useful just to highlight some of the key sort of figures in terms of the contribution and the investment that we've made in the financing of developmental infrastructure in particular. We have lent over 60 billion rands to the renewable energy initiatives, largely the initiative that's driven by government. And as a result of that funding, we've enabled the development of 9 gigawatts of electricity generation in the renewable space. In addition, we've also funded and supported private sector players who are playing largely in the aggregation space to the tune of 15.5 billion rands. And our engagement and commitment continues to grow by the day. If we also include then the funding that we've provided to the last round, the 6th round of renewable energy that is looking at mainly battery storage, those figures are even higher than what is indicated in this specific chart. This is just an example, an indication of the involvement and the participation of Standard Bank in supporting developmental infrastructure, which has both social as well as economic impact. Just talking specifically then in terms of the homes and the approach that we adopt in our home loans business, we have a very simple product that is looking at straight home loans, where we assessed the bankability of specific clients, the risk that is associated with financing of that specific loan, and their ability to service debt. Those are very simple and straightforward decisions, and that reflects really the large market share that we have. In addition, Chair, we consistently seek and look out for opportunities for the affordable housing market, people who fall between those who any financial institution will be more than happy to finance, and those will be covered by sort of subsidies by government. We actively partner with a whole variety of institutions and municipalities in particular. Unfortunately, the flow and the development of those projects have not been as robust and as high as we would want it to be, in part because of some of the challenges that are faced by municipalities, but the complications and number of stakeholders who are involved and want to participate and enable that particular sort of market. But we remain available and willing to engage and participate as and when there are viable opportunities, viable projects, and where the role players are playing their part to make sure that those projects are taken over the line. If I shift gear then, Chair, and look at the specific sort of question in relation to small businesses, we have an active client base of over 460,000 in the small enterprise space. We enable those clients to transact and interact on a digital platform, which significantly reduces the cost of banking And it also enabled clients to access a whole range of banking services without having to go to the branch, which effectively means that clients can apply for loans, can transact, and can be approved via a digital platform. In 2023, we have dispensed over 12 billion rands of loans to this specific client segment. It is a small sort of amount relative to overall size of the asset book of Standard Bank, but nonetheless, it is significant relative to the challenges and the difficulty that is faced by that particular client segment. And we continue to look at other avenues. This slide share reflects on some of the initiatives and how we think about supporting and ensuring that we enable an environment where small businesses can continue to grow and can be given opportunities to participate in a much more wider sort of space in the broader economy. We are very active in the agricultural sector, looking at value chain development. How do we link farmers to markets? We also participate in some of the international conferences, in particular in the partnership with ICBC, which is the largest Chinese bank, where we take South African clients and connect them to export markets in China, which is intended to effectively assist them to increase their production capacity and gain access to a significantly bigger market. And once a contract has been secured, we're looking at opportunities as to how we can fund those farmers so that their sort of trade become far more sustainable and is de-risked through the participation of Standard Bank as well as the participation of ICBC. Secondly, we continue to look at how we could create better access for small enterprises into our own corporate client base and use and leverage the relationship that Client Standard Bank has to effectively connect suppliers to corporate customers, which also significantly de-risks the actual sort of SMME, given that there's a large supplier who's willing to procure from them. And we can take a supplier view as we support and fund that particular sort of customer. If I reflect and share on our approach, I'm sure this is similar in every financial institution, that our lending decision and our lending criteria, as everyone has reiterated to this committee, does not have any race at all embedded in it. But it would be naive to pretend that there aren't other factors that are not necessarily race-based that tend to create a decisioning outcome that effectively is biased against certain segment of our own communities. And we continue to refine our own models. We have a models committee that look at bias inherent in our own models. We test whether the outcomes of our models have the impact of discriminating against certain sectors and sections of our own community. And where we spot bias, we review the models, we refine them, and we validate whether the models are appropriate and give the desired outcome, i.e., of making yes or no decision based purely on the affordability of individuals other than other factors which may be historical. And this is work, Chair, that we'll continue to look at, and this is work that we'll continue to pay a particular attention to, especially now in the era of artificial intelligence, where models are run by machines without the ability of an individual to intervene and to override those models if the outcome is inappropriate and it tends to be biased. But it is a criteria that we continue to look at, to refine, but we are at the moment comfortable that our lending criteria and decision processes are objective and fair. It does not mean they are perfect. They'll continue to be refined, but we're comfortable that they do not have an inherent bias, at least insofar as we can tell and insofar as we know, but we continue to look at those and to enhance them. Let me conclude, Chair, in the interest of time, by sort of just highlighting on some of the key areas where I think there's greater room for us to sort of collaborate and look at additional mechanisms that could improve access to funding and further accelerate the rate of transformation as well as access to development finance. I think in the first instance, sessions such as these are extremely useful. But over and above having these sessions, Chair, I think it would be useful for a number of role players, commercial banks, development finance institutions, government departments, to continue to engage on an ongoing basis with the view of firstly looking at what additional measures should be put in place to enhance the sort of affordability guidelines, and secondly, what should we be doing to de-risk some of the sort of the entities and ensure that development finance institutions play their appropriate role so that commercial banks can be able to supplement that role by providing additional funding and so on. Whilst there are partnerships that have been successful in the past, and there are projects where we've worked very, very well with a whole range of development finance institutions, the IDC, DBSA, and a whole range of other development finance institutions, locally and globally, there is no doubt that there remains additional scope for improvement to look at additional measures that can be put in place so that indeed we can do more, not only as Standard Bank, but do more as the financial sector as a whole. In summary, therefore, Chair, we recognize that we can and must continue to do more and look forward to further engagement on this matter. And hopefully we can play our responsive role and continue to contribute toward the development of South Africa and the development of the African continent as a whole. Thank you.
Thank you very much. I think before we proceed towards the end, there's a learned friend who left the spectacles or tools of reading or whatever you want to call it. It's very fancy. He was one of the presenters. At least that's what we know. You can fetch it this side. In Parliament, we don't steal, so that's safe. No, thank you very much, colleagues. I know that there are colleagues who might have joined us a bit late because of other commitments. I will also give them a chance to speak. And then as the principle that has been established, we can speak to some of the critical issues, but other questions, you can always say you'll respond to them, and then we come back to you. But the important thing is that we have an engagement on record so that whatever recommendations we make, at least it is out of the deliberations. Member Maudwe, I think you'll be the first. Member Mkutu will be second. And then Member Chance, oh sorry, before Member Chance. The member before you, Member Chance there. I just can't see now. And then Member Chance will be, you'll be number 4, Mr. Lega. And then we go to that line of Member Des. And then Member Tring will be last. Oh, sorry, Mr. Mlifa, you'll be number last. Okay. Yes, over to you.
Thank you very much, Chairperson. Once again, let me tender my apology for arriving late. We believe in supporting our own, so we used SAA to fly. And, you know, as usual, they're disappointed. I was in the portfolio of public enterprise prior to being in finance, so I thought, you know, but yeah, SAA. But anyway, I'm here. Thank you, Chair, once again. And let me also thank the 2 chairpersons for organizing this meeting. I think this meeting is long overdue, and I think, if I'm not wrong, this is the first ever meeting. So really, to my colleagues from Parliament, we've got revolutionary chairpersons, and we need to take our heads off for them, because this community on the other side, Chair, is seemingly an untouchable community. So today we touch them, and it's good that it's a physical meeting where we can look them in the eyes. So we tell you your issues. So thank you, Chair. I'm going to start with the Reserve Bank. And just as we took a break to lunch, I was saying to the Chair, by the way, the governor will be sitting governor for 15 years. First appointment 2014, which ended 2019, November, then 2019, November to 2024. And last year in March, 2024, he was reappointed as the governor. I hope he's still online. And my colleague, my researcher, Dr. Timo, actually went to verify that what I'm saying is actually true. So the first question to him will be, what will be your legacy? You've been in this position for 15 solid years. So we as politicians, we come here for 5 years. And many a times we say, we couldn't finish this or we couldn't do that because the time is limited. But 15 solid years, that's a good time to make a significant difference, particularly in the financial sector, which remains untransformed 30 years into democracy. So Chair, I'm going to try to be short, and maybe I should just read my questions and leave the disclaimers and everything so that I focus. So Chair, the Reserve Bank, FSCA, we met them as the economic freedom fighters last year. Not in Parliament, not in our offices. Maybe they would have been intimidated by the Winnie Madikizela Mandela House. But we met them in their offices, at the comfort of the offices, and we raised many of the issues that my colleagues have raised. So I'm not going to repeat them, but I'm just here to say we need a more robust policy development coming from the SRAB. We as the EFF are bringing the nationalization of the Reserve Bank to Parliament, which we hope that you are going to support, because my colleague was saying she agrees that, you know, we need to relook at it somehow. And when we met, the biggest issue was to say, we need that through monetary policy, together with what is the Reserve Bank doing to re-industrialize South Africa. Because we can't have the Reserve Bank that is not playing any critical role in transforming the lives of our people through re-industrialization. And we're still waiting to hear what have been done in that aspect. And it can't be that the Reserve Bank speaks on inflation targeting and all that. That can't be the only thing you do. Resource your research unit such that it comes up with options of what do we need to do. We are living in a crisis. All of us should actually be worried. Poverty, inequality, unemployment. That should worry even those CEOs who earn 9.7 million rands a year. Should worry you that you won't spend your money peacefully, because the poor is getting poorer by the day. And the second one would be, we are making a call as the EFF that we need the establishment or the creation of the state-owned bank. You know what is more interesting, Chair, is that the CEOs of these big 6 banks that presented before us today, all of which are male. It's a fact. I'm not fabricating. They were here in front of us. They're all males. And 5 out of the 6 are not Africans. Only 1 is African. And that's the bank that we bank with. You know, it's a revolutionary bank, so to speak. So what will be that Standard Bank? Yes. The only African CEO in the room. That's true. That's a fact. And I'm not your ambassador, but I'm just stating a fact. So what is your view on that? Will it somehow assist us in this transformation agenda we're trying to push? To the FSCA, honestly, we must express our dissatisfaction and disappointment since the meeting we had last time. We reported to you that there are employers that are not depositing the money of employees after being deducted. And the law actually protects you because it tells you that the CFO or the director that deals with finance in the institution is the ultimate responsible. And you can actually go and assist the adjudicator by opening a case against that CFO, but you have not done anything. How many of these people that default have been brought to court? Nothing. And most of them are seen even in public sector, your municipalities, you know them. The companies that do work with government, private companies, why are they not blacklisted, National Treasury? Why are these companies still being awarded tenders by the state and taking money of the employees but not depositing those monies over to insurances and all that? So we are disappointed. We must actually register that disappointment. But also, as a last point, if we were to pass an act of parliament, a similar entity like Government Employees Pension Fund that focuses on Municipal Employees Pension Fund, together with its equivalent of Public Investment Corporation. Or we can use the PIC, but have a special focus on investment policy that has got a special focus on local government infrastructure. What's your view on that? Is it something that you will support? To my sister, Makunen, I heard you saying the evidence that has been brought forward is not sufficient and. I don't know. It's actually very painful coming from a mother, because people of the same color of your skin are complaining that there's this racial discrimination in the banks, particularly FNB. There was actually a lawsuit looming not so long ago, but because justice is expensive in South Africa, they're so scared of you because we've got the financial muscle, you banks, such that the funder had to pull out of pressure. But there is that case. So you, instead of you saying there was no, what have you done about it? How have you assisted these people that look like you, same color as your skin? Really, we know your mandate. You will even here proudly declared it that my mandate is to look after the interests of the banks. That's what she said. We know that. And we know that you are in the pockets of the banks. You are representing them. They are paying you. You are an employee there at BASA. It's a fact. But really, you'll sell your soul for that? I think you need to rethink how you deal with these things differently. Now to the banks. Chair, I see you're looking at me. Banks, why are you charging us high bank charges? All of you, why? You are charging us what you call yourselves services fee. On top of that, there's admin fee. Then there's monthly account fees. These are the three fees you are charging us, all of you. And then you go and declare profit on charge. The state says we must all bank with you. If we had a choice, we wouldn't be banking with you. You are protected by the state. The state says we give you money, it must be in the bank. Fair enough, we're complying, we're law-abiding citizens. The minute I put my money in your account, you charge me. When I withdraw, you charge me. If I don't withdraw, you still charge me. Three different, explain to me the difference. Services fee, admin fee, and monthly account fees. What is that? And if I were to add all these three, Chair, possibly it's about 700 Rand a month. How many of these clients do you have? If we are 1 million at ABSA every month, 1 million multiplied by 700 Rand, how much is that? So it's a lot of money that, Chair, yeah, I'm getting there. Now to individual banks.
Your last point, Honorable Member.
I'm just going to individual banks now quickly, Chair. There's a perception that you are a racist bank. We actually think you are a racist bank. What's your view on that? And what do you do with these SMMEs who struggle with credit because they don't have power of collateral? How have you assisted them? Because in particular, in the main, they are Africans. What have you done to assist their businesses with loans? Capitec, are you still offering loans through ATMs? Do you still have those revolving loan products in your credit basket? And lastly, there was an allegation, Chair, that Capitec is a loan shark. What is the position now? And this was brought to us, by the way, by the Marikana miners. But then when we started speaking about it, more mining communities came to the forefront to say Capitec is a loan shark. FNB, your presentation on shareholding was a bit high for us. Can you please tell us if Remgro, which is a company of Rupert, or a subsidiary of one of Rupert companies, does it have interest in First Rand or in FNB?
Thank you, Honorable
And
Member.
what's the breakdown of your structure in terms of Indians, blacks, coloreds in your management level?
You can
Not
sponsor other
cleaners and
questions to me
cleaning.
now. Thank you, Honorable Member. Member Lufefa. Member
Thank you,
Godo.
Chair. Didn't know that we're sitting with the loan sharks. We thought that you invited banks only. Chair, you see, for the past 13 years, oh, sorry. For the past 13 years or so, I've moved from being a student leader and had the privilege to be part of an SRC. And from that, I moved to being a manager of the National Youth Development Agency in the Eastern Cape. You see, as I was sitting here, Chair, actually I was talking alone, as if I'm a madman, because my sense is that if I arrived yesterday in South Africa, I would actually think that this is the most progressive country with the progressive banking system ever. In how you have positioned yourselves through the presentations on the very good work that you are doing to help South Africans, to help the South African society. And I'm telling you, I don't agree that the picture is as you paint it. The first thing I can tell you is that in my time as a student leader, I know that you yourselves as banks, in terms of lending for student loans, you're very expensive. And you don't do it as a social responsibility, you are doing it for profit accumulation. Now, that is not an investment in good faith. It's an investment because you want to derive profits out of it. We have a national financial aid scheme driven by the state. South African youth who have an interest of getting into universities, but because of their financial backgrounds, have been saying that they wish that in South Africa there can be free education. Now, my challenge is to you, if you are loaning not to derive profit from these loans that we are talking about, that we're helping students, would it be considerable to say to you, redirect that money and invest it for free education in South Africa as a social responsibility? There's no profits now. Agiri, you are saying you want to help South Africa. For that matter, you are talking about financial education. Now, maybe you have not been in South Africa. Of course, the state has been trying to resolve the challenges of education, basic education in particular, and to ensure that it lifts its people to be more literate and to understand how to read for meaning. But in South Africa now, and there's a report to this effect that more than 80% of children can't read for meaning. So it means you are presiding over a society possibly in the next 20 years will not be able to read for meaning. And the very same society, you want to say you want to teach it to be financially literate through reading, through presentations. And I'm saying to you, the fact of the matter, if you don't invest in education, in its infrastructure, in its quality, and access to education in rural areas, access to education for young people in the townships, you are building a customer base that is not going to be employable in the first instance. So the money that you are carrying, you are not going to have it. So the fact that now you have money to stay in big houses, the levels of inequality and poverty in South Africa makes it not sustainable for you to get these bonuses that you're talking about. If you don't come to the party and help us as the state build a prosperous South Africa. Actually, I'm convinced, Chair, that banks actually reproduce inequality in South Africa. They are part of the reproduction of inequality in South Africa. Now, let's put the point that we're making in context of racial profiling. We are not saying when I walk into a bank, I am black, you say, we are going to give you a premium of 24%. I'm making an example. And John walks in and you say, no, John, because you're white, we're going to give you 5%. That's not what we're saying. But we're saying the context of South Africa and how your matrix is designed speaks about assets and risk. Now, if you punch in your system a Lufefe that comes from KwaZakele with a debt of NSFAS, who has no assets, who has no financial backing at home, and this person in your matrix will come out as a risk, more than Patrick, who comes from Sentin, same age, has a trust fund, doesn't have a loan, has a car, has this and that. It will come out differently. And that's the context we're saying. There's an element in your matrix of racial profiling. Not that there is a person sitting at front desk and say, you're white, you're black, you're white, you're black. No. And this is a sense that I get, that whether you're pretending or not, but I get a sense that this is how you want to be ignorant to this fact. And I want to give you a benefit of the doubt and say that you are not pretending somehow. Now, Chair, you see, there is, throughout this presentation, it's a theme that there has been support to SMMEs. And I can tell you now, Chair, I worked with young SMMEs in the Eastern Cape. The cost of getting a loan in banks is very expensive. Compounded by the fact that you don't have an asset base as a black person, young entrepreneur who's black, you don't have an asset base, therefore they consider you to be risky. It's not a fiction. We're here, we're living in South Africa. It's not a fiction. Unless you are saying to us, and maybe we should go into those numbers to say, if you are saying you have spent, for instance, 20 billion in SMMEs, let's go and check who are these SMMEs for that matter. And I can tell you now, a majority of them will be white, without any doubt. So numbers don't excite us anymore. We're excited about the detail, concretely, the substance of the numbers and the impact that these numbers make. And I can tell you now, people in South Africa are poor and they are jobless, not because they don't have ideas, but because they don't have access to capital to convert that capital into productive assets. And that's a fact. And maybe the CEO of Standard Bank, because you are the only one that is black, you might understand this reality. I was quite shocked that the ma'am from Basa, it's like she arrived yesterday in this country, she's so passionate. No, everything is fine. She's passionate, you could see that really, she believes what she's saying. And it's not there, it's fiction. It exists in her own mind. That's South Africa she's talking about, exists in her own mind about how the financial sector, its standing is currently. It exists in the mind, doesn't exist in reality. Now, Chair, the last point, Chair, before you get impatient with me, please indulge me. You see, here we're told that, in fact, in terms of credit profile, Chair, 8% of SMME, 8% goes to SMMEs and 27% for corporate. It was presented here. You see, Chair, corporate in South Africa has taken a back seat in investing in productive real economy. It has left it to the state, corporate. Now, if you are saying a lot of your credit allocation goes to corporate, you know what it effectively means? It effectively means it doesn't go to the productive sectors of our economy. It actually goes to financial speculation markets for people you call shareholders, people you call executives that benefit out of that money. By the way, that money is money that you take from the majority of South Africans. Why can't you reinvest in building their own economy to create opportunities and to create jobs for our people and to reindustrialize the South African economy? Of course, it's not in your interest because you appreciate a highly financialized economy because you derive profits from it.
Let's conclude, member.
The last point, Chair, out of my 13 questions, which I've asked 3, is really the issue, Chair, of the issue of credit facilities. I can tell you now, Chair, again, Chair, I mean, it's as if they are living in their own. South Africans are indebted. It's a fact. South Africans are in debt. Now, the debt that you are talking about, which is about this credit allocation, which is about building an inclusive economy. No. From where I am sitting, the debt that I relate with is debt for survival. That's the money I borrow from you. I don't borrow money because I want to borrow money for. It's debt I get credit because I want to survive. And there are people that get credit because I want to invest it in a business, for instance. But I can't afford it. I must get credit to survive. We're indebted. There are cars here that we're paying. A car is 5 million. I'm making an example. You get a car for 5 million. I'm making an example. A house is 5 million. You pay the house for 20 years. You pay the car for 5 years. And no one explains to us what is going on here. If you are saying to me, I can pay this house, which is 1 million in 20 years, but I can buy a car which is almost 1 million, but I pay it in 5 years. What is the maths here? And when you recalculate in your own mind, you find that the premiums are very high when it deals with repaying the bond. And you're told about risk. No, there's a risk factor. And these are the things that, Chair, because I promised,
Thank you,
I'm
member.
done, Chair. Just to conclude, Chair, I promised, Chair, that I'm not going to speak as a complainant. It proves to me today, Chair, we can't leave the business of building South Africa to the private sector and the financial. The state needs to regulate banks, more regulation to force them to channel money for the development of this country. Otherwise, Chair, this country is going to go to the dogs. Thank you.
Thank you, member Imran. And then member Kingsley will be next.
Thank you, Chairperson. Chairperson, let me welcome this engagement with the banks. I think it's crucially important that it was high time we had this conversation of the transformative agenda. So let me appreciate the chairpersons of the Standing Committee on Finance and the chairperson of the Portfolio Committee on Trade and Industry for this opportunity to engage. Let me also appreciate, Chairperson, that what I've seen here, and I must firstly begin by acknowledging what appears to be significant or quite a bit of effort being made by the banks that was demonstrated also by people of color that were the CEOs that came here, and the level of empowerment of previously historically disadvantaged individuals. So let me appreciate also the government that was in place for the past 30 years that created legislation and an enabling environment. Often changes can't take place, and the purpose of government is to intervene legislatively to drive such changes. So we must acknowledge for the past 30 years that the legislation of the government that was in place played a significant role in bringing about the change that we see today. Chairperson, I have a question. I joined quite late because I had another committee that I had to be part of. So I'm just going to, I have a question each of the commercial banks that in the after lunch session. I want to begin with Absa Bank, which was formed in 1997 through the amalgamation of United, Volkskas, Allied, and Trust Bank. And they operated in the environment of the apartheid days in the pre-1994. And I must acknowledge and appreciate the transformative the changes and the contributions I've seen. But my question is, has the banking sector, are we still stuck in the pre-1994 mindset of changes, which my colleagues have been frustratingly alluding to? And Absa Bank, because it comes from the Trust Bank, the Volkskas, how did you manage to see that transformative change? And are we still being legislatively held back? Are we still sitting with the legislation of 1994, trying to drive a transformative agenda? That's my question for Absa Bank. Capitec Bank, if government and if we carry out oversight with the executives, and if they had to give us a 52.2% performance, we would hold them to account. So Capitec, you claim or you state that your overall approval rate is 52.2%. I don't know if that's something to celebrate. But in a transformative agenda that we're trying to drive as government, my question to you is, where's the 47.8% that we could not approve, and what is the benchmark that you feel we should achieve for approval of loans? Because that's exactly what the honorable members who spoke before me are alluding to. Those historically disadvantaged individuals might be falling in that category of 47.8%. So my question is, what are your strategies and what can we do to up that 52.2%? To FNB, you speak of the banked and the unbanked. And here's a question for you is, what do you estimate the banked, underbanked or unbanked market to be? And how do you think, what can we do to intervene to make that population bankable? Question for Investec Bank. You've indicated you specialize in various sectors. So my question to you is, what sector has the greatest potential to be unlocked? Which sector do you believe, let's phrase it this way, which sector from your portfolio has been the most progressive sector and why? And the second question is, which sector has potential but has not been unlocked, and how can we intervene? Because remember, we need to talk to the apex priorities of creating jobs, building an inclusive economy, reducing the cost of poverty, that which the president had highlighted in his previous year's State of the Nation address. Nedbank, you highlighted that your strategic value unlock is digital leadership. And the committee that I was sitting in this morning is communications and digital technologies. And one of the key drivers, one of the key aspects for us is to unlock the potential in a digital economy. So question for Nedbank is, have you tapped into the digital economy? And what can you, Nedbank, do? How can you advise us? What should we do to unlock the value that's sitting in the digital economy? And I say that because in one of your slides, you mentioned that you have a specializing in digital leadership. I think lastly is Standard Bank. Standard Bank, you claim that 1/3 of every house in South Africa is funded by your bank. Well done, that's 33%. You also indicated that 37% of your total new home loans to clients is from home services. My question to you is, what percentage of that 1/3 is attributable to the transformative element? I.e., what percentage of that is due to previously disadvantaged individuals that could otherwise not have owned a home, but through your phenomenal intervention are now part of that 1/3. If there is a significant percentage, then it's something we can celebrate. Thank you so much, Chairperson, for this opportunity to engage.
Thank you very much, Member Kingsley.
Thank you, Chair. I'm going to try to be succinct and quick, but very specific questions for specific banks, if I may. Let me start off with just two comments. First, the first comment, and I was quite interested in Capitec's presentation around the communal tribal land for security and how we as a government can assist. And I think if they could comment and give us some advice, because I think that will release a number of economic transformation in itself. Then, as well as the informal businesses that are not banking, I asked a question previously, and again, maybe this is a question to all the major banks, apart from Capitec, that has already started, to tell us how are they going to deal with informal businesses in particular. There's a massive opportunity for informal businesses. We saw now recently despite the fact of the health issues around disposal shops, but in particular that sector, how do we service them and support them? A particular question to Capitec, sir, I take note as that you are the disruptor of the industry, and I like to see I like what I see what you're doing at the moment. I just hope to see more disruption around particular SMEs and in the informal space. So that's just a comment to you. A question to ABSA and FNB. As far as the housing is
housing loans are concerned, do they, and I get a sense that some of them are presenting it as a developmental aspect, or is it an investment or a productive investment? So I could just need clarity around that. And can't we currently seek, especially with the low income, that housing is actually a productive investment as opposed as a developmental? So the definition, just a definition discussion. Then, Chair, in the report, the briefing report we received, just a general comment, and maybe if all the banks can comment, there's a general decline in social investment. We picked up, I think, over 200 million in the last 2 financial years. Then in particular to Standard Bank, Mr. Fichler, good afternoon. A lot of time for you. And as well as Capitec, you mentioned the matters around the NCA and the Act. We need your guidance to tell us where do we need changes to activate the economy. We're only looking at 2 factors. I'm not interested in any other factors. For the next 5 years, economic growth, and how do we decrease unemployment? That's what we're looking at. Nothing else. That's the focus of this GNU. And my question to the both of you, from an NCA perspective, how do we kill all the red tape? And Nedbank, Standard Bank, FNB and ABSA, a bit of a sticky point, but the matter around expropriation, and just hear me out quickly, expropriation without compensation and the long-term risk for loans to a particular agriculture. I'm very concerned about the methodology around that, and how would you fund agriculture going forward? Because that is a massive opportunity as far as growth is concerned. We saw that there's a massive commitment from us as a government around particular small-scale farmers and the money that we're going to invest in the next 5 years. Then in particular, Mr. Fichler, a question to you. Your massive presence in Africa. We take note of that, but I would like you to tell us, what are the lessons that you've learned as a bank? And what can you share with us from a government policy perspective, what's happening in Africa, and that will work well with us in South Africa? Thank you, sir. Thank you, Chair.
Thank you very much, Member Chance.
Thank you, Chairperson, and thank you very much. This afternoon's presentations have revealed yet another paradox, which is the fact that every bank that's come here today has gone out of the way to say that you do not use racial criteria in granting loans and pricing risk. And yet you've been asked to come here today for the very fact of reporting on your transformation efforts based upon the positive discriminatory actions that you're taking to support people of a certain racial group. That's the fact. Now, this really goes to the heart of the tensions that exist in our constitutional settlement, which is the fact that we have a non-racial society, but we have to address the discrimination of the past, and we have to find ways of redressing those discriminations. So it might be surprising for some of you to realize that actually I agree with much of what Mr. Nkutu was saying, my NC colleague on the right, in terms of his analysis of this problem. Where I disagree is where he comes up with solutions which I think are totally unworkable. So I want to ask the question of the banks. Do they think that the measures and the incentives and the ways in which we have tried to resolve the problems of the past have proven to be correct? And do they not create a dissonance with the way in which you run your business, which you've already told us is based on non-racial principles? And I want to then turn the attention to a more practical issue, which is the fact of the financial system in which we operate, in which money is provided in one of 3 ways, generally speaking. It's either credit, which is provided by you as banks, and your expertise is in credit risk management. It's also provided by venture capitalists who provide equity, and their expertise is in evaluating the potential for growth in a business. And then the third is the provision of patient capital, or I might call money to address market failure, which is generally provided by government or DFIs. The trouble is that those 3 entities and institutional categories don't really talk to each other. They do up to a point, but they don't really occupy the same space. And in my view, this is really going to the heart of what we have to try and resolve as a country. And you have to resolve as institutions providing credit. to ask the question, how do we deal with these market failures? How do we deal with the fact that, as Mr. Nkudu says, there are hundreds of millions of people who don't have the things that they need to get the credit that you offer. They don't have it, and they happen to be Black. That we don't have generational wealth in Black communities in this country, which means they can't develop the collateral that they need. So this is where this whole rethinking has to happen, in my view, to address these issues. And it brings me to the question of the Transformation Fund, which was announced by Minister Tao a few weeks ago, and which has caused a huge outcry amongst some sections of society, but an immense amount of enthusiasm from other sectors of society. And just to remind you, the Transformation Fund really goes to the heart of this discussion, because it's asking, how do we take money from the private sector, pool it in a fund run by the National Empowerment Fund to transform the economy, to provide more assets and growth potential in the hands of Black people. And I would like to put it to you all to think very hard about this question and come back to this committee with some answers to how the marshalling of funds and resources in the entire ecosystem can begin to answer the questions that we're posing today. And I talk about the ecosystem because it's government, it's entrepreneurs, it's tertiary institutions, it's local government, it's civil society, it's consumers, it's export markets, all the people that are out there that have a view on how this economy can be transformed. And I use the term transformation in the non-euphemistic sense, in the sense of providing opportunities for everybody to participate in the economy. So I'd like the banks to go back and think quite hard about this. And some of these questions may not be answered in 5 days, but there will be a discussion in this country around this big question of the Transformation Fund and does it actually solve the problem? It's really not just money. It's the environment in which we operate. Do we have an environment which is too constricted by red tape? Do we have concentrations in certain sectors which prevent competitiveness and new entrants into the economy? And I think these are the questions that this committee will be addressing, and both committees, in fact, and all committees in this parliament that have some say around the need to grow the economy and provide opportunity. So that's my broad question, and I look forward to your responses both this afternoon and in writing. Thank you.
Thank you, Honorable Des. Oh, sorry, Honorable Kalega. Apologies.
I nearly said that there's a changed gender now.
Thank you very much, Chair. ABSA's significant credit allocation for the agriculture sector at 53 billion, which is close to 5 times the allocation for small business at 10.96 billion is noted, Chair. However, to what extent does the bank consider other economic sectors beyond the agricultural sector, which constitute a significant component of the allocated credit? And how many emerging farmers benefit from this? And how do you make it easy for the emerging farmers to qualify in terms of your criteria? It would have been important, Chair, if we can get a breakdown on beneficiaries. And I'm therefore requesting that in their submission, ABSA submits the beneficiaries of this 53 billion so that we see how many Mazimugos versus the Fantonders of this country that are benefiting from this 53 billion. Because it is important for us to make sure that the inequality gap is narrowing. And currently it is widening. So we cannot have an inequality gap widening, and yet we have so much money that is allocated for this sector. And then the second question to ABSA, how does ABSA perform in terms of ownership, management control, and skills development elements, as these elements are imperative to build inclusive economy? On Capitec, slide number 6 alludes to challenges that hinder them from granting more credit at lower interest rates, as you refer to an outdated National Credit Act when you were presenting. What are the specific impediments in the Act, and what proposals do you have in relation to amendments in the Act? Has there been engagement between the individual banks as a collective or as a collective with the DTIC and NCR on matters relating to the legislation that you have alluded to? Standard Bank, in terms of pension-backed lending, does this not expose people to losing their pension? Should they be unable to pay, and therefore putting our senior citizens in more vulnerable situation? And in terms of SMME support, there is a qualifying criteria of a minimum of 1 million in revenue on slide 9 you have spoken about. Are there any other products targeted at micro enterprises with less than this amount in revenue, less than 1 million, or it's just 1 million and then nothing else? To all the banks, Chair, the Competition Commission released a report in 2021 on measuring concentration and participation in the South African economy, otherwise referred to as the concentration report, indicated that investigations shows that 40% of all new businesses in the country fail in their first year of existence, while 60% fail in the second year and 90% in the first 10 years from inception. In other words, there are high existing rates for SMMEs, Chair. There seems to be a disjuncture between what the Competition Commission says and what has been presented to us today. Millions are being spent on providing credit to SMMEs. However, the impact of such is not seen in terms of job creation and economic growth. So my question, Chair Uguti, where does this money they indicate they provide SMMEs and productive sector investment in the economy really go? So this question is to all the banks. Anyone can respond to this. I don't want to waste time, Chair. Lastly, back on the comment from the finance chair on Itala to SRB, may I request that we have a meeting sooner for accountability, Chair, as the question made by the chair needs to be responded to. People cannot act against Parliament recommendations and tell us about sub judice and even get amused in response when the chair is making comments. That is unacceptable. We have to be respected here. We are members of Parliament. We are representing the community. We are not here to do. We are here to represent our people. Thank you.
Thank you very much. Member Van Rooyen.
Chair, 24 years ago, addressing the masses of our people, the then Deputy Secretary of the South African Communist Party, Jeremy Cronin, indicated that unless we get the banks right.
Come closer to your mic, Honorable Des.
The mic.
I know you are challenged by.
I'm not sure I'm challenged vertically or what. Yes. Unless we can get the banks right, get them to support small businesses and eliminate racism in their ranks, our country will continue to struggle along. Close quote, that's what he said. Another leader from the ANC is Bundebele, 24 years ago, addressing the same event but in a different province, said banks were hypocrites as they preached economic growth and yet refused to help small enterprises or the informal business sector. I mean, Chair, I'm quoting these prominent leaders of our South African society because we seem to be listening to our submissions here as members of Parliament. We seem to be somehow regurgitating the same submissions that they made 24 years ago. I'm not overlooking strides that have been made in terms of the legislation, but the real of the matter is that What we are saying here as members of parliament was said 24 years ago. So I don't know, maybe we are talking to the wrong people. Maybe we are talking to the employees, we are not talking to the employers. Where are the owners of these banks? We all know who are the owners of these banks. And we all know their alignment to profits at the expense of the masses of our people. Are we not wasting our time by engaging the employees instead of calling the owners of these banks to come and account on the mess that they are causing? Because I don't think they are patriotic as they claim to be. They are indeed, Bundebele was right. They are hypocrites who are not loyal to the development of our country. So I think as lawmakers, the time has come that we should summon the owners of these banks, because these people will be afraid. We are telling them that they must do away with bank charges. Literally, we are saying do away with the bottom line. That's their key mandate. If they don't get profits, they will be chased away from their employment. So let's talk to the owners. Let's test their level of patriotism. Well, maybe let me not ask difficult questions. Let me ask a question that might be relevant to them as employees. I just want to know how, as banks, are you managing conflicts of interest when providing banking services to companies and individuals that directly compete with businesses that your banks have financial stakes in? I'm asking this question because one of our, some of our constituents are saying you as banks have closed the accounts of companies or individuals who compete with entities in which, as banks, you have interest, or maybe as executives, you have interest. So how do you manage this conflict of interest? Because some of the banks are saying our accounts were mainly closed because the executive in this bank is participating in a company who is my competitor. So that's why I'm easily victimized. How do we manage this interest, the conflict of interest as executive? Thank you, Chair.
Thank you very much. Member Moali.
Thank you so much, Chair. I have just two questions. Chair, as MK Party would like to know as to why are the members or the executives of National Treasury move to these banks and hold some executive post in the banks. Immediately when they move this side, they hold executive post this side. This is a Chair, after now the question is, does it not constitute conflict of interest given the dynamic relationship the banks have with the National Treasury during and after their tenure? That's the question. And then the second one, Chair, I'm under the impression that the banks should operate neutrally. But Chair, we have seen the banks now being right at the middle of politics. We've seen these banks being used to settle political scores. Now, my question, Chair, is the banks should provide financial services not to police public opinion about people. So why are the South African banks denying the services to individuals based on their name, on their political association, or on the vague notion that says a reputational risk? Now, whilst on that issue of reputational risk, now who determines what constitutes a reputational risk? what safeguards exist to prevent this from being used as a political or ideological tool? The last one. Where does the definition of reputational risk begin or end? And how does the bank ensure that this principle is applied fairly and consistently? Really, Chair, if we are going to be sitting with the banks that are going to participate to settle political scores, then we have a problem. So really, I would really wish that the banks would have a say on these questions that I've asked, particularly about what they quote or what they use as a term when they say reputational risk. To protect a reputational risk, this is the decision we took because we are protecting some reputational risk. Now, how is that then safeguarded that it is not used as a political ideology to settle political scores? Thank you so much.
Thank you very much, Member Wendy. Where's your hand up? Fine, okay. Member 3.
Thank you, Chair. One of the benefits of speaking last or penultimately is the benefit of focus. So one doesn't have to repeat the questions that have already been asked. Chair, so my question to the banks is a question with regards to concessional finance. Concessional finance is a known tool used to effectively support industrialization and hence increase economic growth within the nations where it is employed. Major DFIs give concessional finance to first world countries such as UK, USA, and it is said that research shows that in this particular case to the USA and the UK, your concessional financing is at rates of 0%, sometimes even below 0% interest rates. But to African countries, it is between 5 to 16%, so-called concessional finance. And I would position that we certainly should not be perpetuating apartheid funding measures, which some FDIs practice, or development finance DFIs practice. It can be argued that the loans dispersed to most Black South Africans is prime 11.25% plus. In one of the presentations, it was plus 6%. And so most Black South Africans who are applying for loans quite possibly could be paying up to 17.25% on those particular loans. Now, this 17.25% interest rate is a deterrent, particularly small businesses. It serves as a deterrent rather than an incentive to conduct business. So my question now, Chair, is can the leaders of the major banks present here tell me what their concessional financing looks like as contributors to economic growth and in assisting those who have been previously disadvantaged, but some who have great business plans and wish to meaningfully contribute to the growth of our economy? Thank you, Chair.
Thank you very much. Member Beasley and then Member Bryan will be the last.
Thank you, Chair. Can you hear me okay?
Yes, we can hear you.
Thank you, Chair. So I think we all agree that poverty, unemployment, and inequality is a massive crisis in our country at the moment. And the main reason for this is the lack of economic growth. And I think sitting here as parliamentarians, we've been very critical of the banks. But I think it's very important that Parliament needs to look at itself. I mean, where was the 4th and 5th Parliament when state capture was happening? Where was the 6th Parliament when Denau was getting bailouts? And I think we need to look at the mirror and put a lot of blame at ourselves as the lawmakers. And I think from Action SA's perspective, the only way we're going to address poverty, unemployment, and inequality is through economic growth linked with social justice. And I would just like to ask each one of the banks, the important players in the economy, what is the one economic intervention that they would like to see to be introduced to get inclusive economic growth going? Thank you, Chair.
Thank you very much. Member Mlifa.
Thank you, Chair. I would like to ask my questions very undiplomatically and throw diplomacy out of the window, because I'm getting worried that perhaps we are schizophrenic and think that the banks are out to attack us. Everybody agrees that there is a problem, but the banks don't think so. So maybe we are schizophrenic, or maybe as a society in South Africa, we just happen to be bipolar. Sometimes we are victims, sometimes the people who are alleged to be the perpetrators don't see anything wrong with what is happening. But to be undiplomatic and to go to a tale of two cities, which is what South Africa is. There is one company in South Africa, we read in the media, none of the banks want to open their bank account. The ones that have the bank accounts are closing them. In fact, there are legal battles to keep the bank accounts open. Yet, when one reads the press and the background to the story, one does not get a sense of the crime that this company has committed. In fact, on the other hand, it looks like the pressure is coming from somewhere else, but certainly not the reasons that were stated by Abasa of criminality, this and this and this and this and that. The banks are just using their discretion to say, we won't bank with you and nobody can force us to bank with you. And this company has had to take the matter to court. I think we all know who we're talking about. It's Sekunjalo. On the other hand, there is a company that has its roots in South Africa, a white company that has been found guilty in other jurisdictions. In the United States, they found it guilty of corruption, of bribing even judges, of bribing heads of state. I'm not saying alleged, I'm saying found guilty. They have paid the admission of guilt fines. In New York and in the United Kingdom, they have bribed people all over Africa, in South America, everywhere. I think even in Australia, they're having problems there. They're paying admission of guilt fines. And so there is criminal activity that has been proven because the matters have been finalized and the company has pleaded guilty. In South Africa, they have not been found guilty of anything, but we know that in other jurisdictions, they have been found guilty. All of the banks are quite happy to bank with them because it is a company that has its roots in South Africa. The people that are running the company are brethren, South Africans, and they quite entrenched in South African society. Happy to open bank accounts. No concerns about the BASA things that were being raised here about criminal activity and this and reasons and what have you not. And yet the other company, we're not quite sure what is it that they did, other than to speculate that perhaps the pressure is coming from somewhere, from a quarter that we cannot quite put our finger on. And the latter company is, of course, Glencore. So my undiplomatic question is, why are you not prepared to bank Sekunjalo, and yet you are prepared to bank Glencore? I did say it will be undiplomatic. And then finally, another pointed question to FNB. When the Itala saga happened, we got frantic phone calls from Itala clients who are saying that FNB is calling them, asking them to transfer their accounts. I just wanted to know, given all the legislation about privacy, POPI, and so on and so forth, where did FNB get the details of Italat lights? Were they given to you by Itala? Because we asked Itala, and Itala said they didn't. They didn't give them to FNB. And yet FNB had all this information and were making targeted calls to Italat lights and saying, we know that your bank has got a problem. Why don't you move over to us? How did that happen? Thank you.
Thank you very much. I think due to time constraint, and we still have to have a closing remarks, which will guide the meeting. Let's allow the banks, they will, in order of presentation, you can respond where you are. Just 3 minutes, and then the rest of the issues can be responded to in writing. I think the Secretariat will keep in touch and will make sure that we follow up on those issues. I think the first bank was it ABSA? Yeah, 3 minutes each. That's high level on things that you think are critical. You don't want to leave before answering them tonight.
Yeah, thanks, Honorable Chair. Hopefully you can hear me. Yeah, let me first say the words used as a thematic here, this mindset of transformation. I think that, to me, probably sums it up very clearly. Certainly as a bank, and I don't think any of the banks, we're saying that everything has been done. There's a lot more to do. And we all know there's a lot more to do. But the key question is, if we want that, if we approach it with that mindset of transformation, what is the unlock to it? And that question was asked. And I think we've started to see evidence of where it can come to the fore. And it's that public-private partnership. It's about collaboration. Not one of us is going to unlock this on our own, and we could throw stones at one another or whatever the case is. That's not what it's about. There's a bigger need and there's a bigger purpose. And we've got to get to understand those elements that ultimately are going to make a significant difference. And that's about us collectively getting together to understand those things that will make a difference. We've seen instances in the last 18 months where a significant difference has happened on many fronts. I'm not going to get into it. But I mentioned it in my presentation, productive loan growth. You know, I said our compound growth rates over the last 10 years has been 6.5%. It sounds small, but if you actually take that, what it is now versus what it was 10 years ago, it's an 88% increase. GDP growth, on the other hand, has sat at 0.8%. We have to find ways to get growth, because without that, it's impossible for banks to continue and ultimately to unlock this situation on their own. You've got other risks that are coming into the situation. We've all heard about AI and all of those other elements that are coming to the fore at the moment. You know, it's our duty collectively that we have to find those options, those opportunities that will ultimately create that right environment for collaboration, for growth, that ultimately leads to a completely different position for the country in the long run. Thank you very much, Honourable Chair.
Yes, Capitec.
If you look at what everything has been said, I don't think it's about race. I think it's where we as private sector and government must actually go and sit together and to say, how do you unlock the potential of South Africa? If I look at what is happening in communal lands, there's no title deeds. If I look at the title deeds that have not been updated, if I look at the National Credit Act, that's old. If you look at what we're doing from a risk perspective, we've got deposits and we need to protect them, and we need to work in a very regulated environment. So I think it's more about how do we work together to actually unlock that potential. And I think if we really we take politics out and we really say, how do we grow South Africa? And we get small groups together to actually brainstorm and say, how do we really get the structures, the things that's not working, how do we get that right? I think then we will be much more successful than we currently is, than just trying, because it's two opposite sides. I think we need to get together and really work on things and say, how do you guys? We can't give credit to everyone. It's impossible. But we can work together to find ways to make it easier. Thank you.
FNB.
Thank you. Honorable members, so I'll take up maybe one or two questions. Let's pick up the first one on Itala. It's not information from Itala Bank. Through the bazaar, we were asked to help. What we are helping on? Grant recipients. They were paid today. In a very short time, we were asked to open up 60, 70,000 accounts with information from SASSA because they are the individuals paying it, telling us to really pay these amounts. That's the information we got. It would have been much easier for us, clearly from the pressure in the room, to say no. It wasn't a financial decision, because trust me, the cost of opening up and going through the process, issuing cards in our branches, having queues, refreshments, etc., far outweighs the revenue we're going to make. The thing with this is, how can we help? Now, those 60, 70,000 customers have every right, after they get the grant, to close the account this month, next month, following month. There is no obligation for them to bank with FNB. We wanted those vulnerable customers to get their grant money. The other Itala customers running a different process from what I believe. That's the normal bank account customers. These are SASSA grant recipients, and the deadline for those are today. I think there were like 9,000 customers that needed a payment in terms of COVID payments. That was a couple of weeks back. We just could not help from a timing perspective. So I'm hoping, and I'm happy to take follow-on questions on that in particular. I think the second question was around shareholding. The shareholding is on Remgro, and I think the shareholding was on Royal Bafokeng. Remgro shareholding is 1.45% on First Rand's total shareholding. Royal Bafokeng is 2.59%, and that was at December. The PIC is our single largest shareholder, and that's at 14.6% on shareholding as of December. And I think way up in terms of a statement around discrimination and court cases, etc., FNB has not squashed any court cases. We've been through over a number of court cases over a number of years in terms of discrimination prices. And in each and every one of those, and it's public record in the courts, we were found not to be guilty, i.e. nothing was proved in terms of discriminatory practices on pricing to customers. Now, clearly, every now and again, it's a business model, I believe, to take advantage of vulnerable customers. So I believe it is what will respond around the place, but we have quashed not a single legal case. We've gone through every one of those processes, and I think those are over the last 15, 16 years across the piece. Chair, those are the three questions, but I did offer the honourable member a follow-on question on the SASSA grant recipients, and I'm more welcome to take that.
Investec.
Thank you, Chair. I think just at the outset, just to reiterate, the sense of the banks is simply to say we're here to engage, we're here to work together within the constitutional framework that we operate in. And I think the debate has had a lot of facts that were presented today. A lot of it has to go and be still debated, discussed. And as part of the sector, I think we would welcome further engagement and have further discussion on key issues that can play a role in transforming the economy. I think every institution that is represented here today has that commitment. We want to be part of an inclusive growth story for South Africa. One of the questions raised was around which sector would be a key sector to invest in. And for us, when we look at it, I think I'll touch on what my colleague from ABSA, Charles Rasson, mentioned was around infrastructure. And it's around public-private partnerships and how we can start driving productive economic assets for the country. And public-private partnerships can unlock that significantly for us. And you've got a willingness from the sector to engage, to work with government to unlock that, which we believe will contribute directly to growth in GDP and growth in employment. Secondly, I think there was a question raised around conflicts of interest and how banks manage that. Banks operate in a very regulated environment where those meetings are minuted. If there are individuals present who have conflicts of interest, they have to recuse themselves from those meetings. The minutes of those meetings are also subject to the oversight of the regulators. So just to give some sense on that, and I think in terms of a number of the other questions raised, we will take that opportunity to respond in writing in due course.
Thank you very much. Nedbank.
Thank you, Chair. I'd align myself with the comments from my peers around our role around economic growth. In other words, there's no doubt that public-private partnerships are starting to make a difference with respect to the energy sector. If I just think about the amount of growth in the renewable energy and what that's been doing for our economy and the potential of that. I'd also think about logistics and the improvements we need there and the role we can play to support that. Water, no doubt in my mind that over time, water will be a real challenge for us. Unless we're all really focused on that today with respect to public-private partnerships, I think we're going to have an issue down the line. And then lastly, agriculture. I think agriculture can be an amazing growth vector for our country. The other one, the honourable member asked about digitization. We'd be standing ready to support in any way, any committee that wants to kind of get extra capacity or learnings. Nedbank has embarked on a significant managed evolution program, which digitized many of our back office processes and made them more efficient. And no doubt, I think that's what our country needs across society. And then, Chair, any other questions we'll respond to in writing in due course.
Thank you very much. Standard Bank.
Chair, if I may quickly go through the specific questions and we will provide written responses to those that we can't get to. Around home loans, in the affordable housing space, 85% of home loans go to people who have been previously disadvantaged, i.e. Black people and women. And in the sort of overall home loan, 65% of our home loans go to sort of Black people. And we do, tabulate and classify that, for obvious sort of reasons. And on the second specific question around sort of pension-backed lending, fortunately, this part of our home loan book actually is the best performing relative to others, in part because people tend to choose that route because the asset is fully paid and they are requiring small amount either for additional improvement or installation of solars and so on. And those tend to be people who are salaried. So it is the best performing part of our book. Pension funds themselves also implement additional measures to make sure that the actual pension fund is not strengthened, so it's not threatened. So you effectively have two gates, i.e. the pension fund gate as well as the bank gate, and that tends to put additional controls and measures. Just two generic comments, Chair. I think the first is that there is no doubt that credit decisioning by definition. So I was not pretending to say there isn't discrimination. Credit decisioning by definition is discriminatory. When you say to a person, I will grant you a loan, and you say to another one, I won't grant you a loan, you are already making a decision that effectively discriminates. And the underlying issues, I think, have been well ventilated by members, that the biggest issue is that the majority of the applicants do not have an asset base that they can leverage. So you have historical practices that are effectively skewing the decisioning to effectively disadvantage people already who do not have an asset base. And I think there's something that ought to be explored there by both commercial banks as well as government entities as to how do we put mechanism in place to cushion people who do not have an asset base, to effectively remove that particular factor that tends to put them at a perpetual disadvantage, especially those who are in that affordable housing bracket, because that's where the biggest impact is and so on. The last point, Chair, is around structural issues that are holding the South African economy back. There is no doubt that infrastructure, which has been raised by other sort of colleagues from commercial banks, is by far the single biggest issue. Think about the challenges that we see in municipalities. Think about what's happening to a city that should be benefiting hugely from tourism, like a Tegwini and so forth and so on. So I think the sooner we can deal with some of the infrastructure issues, especially those that have a material impact on economic growth and economic infrastructure in particular, I think the better South Africa would be, and the greater the sort of multiplier from an economic growth point of view is likely to be. But we remain available and willing to partner and engage in a whole variety of these issues, Chair, and thanks for the opportunity.
Thank you very much, sir. Dr. Maswanganyi, your last words.
Thank you, Chairperson, Honorable Masina, colleagues, members of Parliament, colleagues from the banking industry and the regulators and the two departments, National Treasury and DTIC. I believe, Chairperson, this meeting was quite very important because we were able to address a number of very critical issues. Before this meeting, I got quite a number of calls that why are you calling the banks? Others say the banks are afraid. Why are they being called to Parliament? Because I don't know when last you were here. Some of you might not have been here, maybe in your entire career. So the question was why? We are Parliament. We are not cabinet. Government has got 3 arms. There's cabinet led by the president. They are the executive. You have the judiciary that interpret laws. We are lawmakers, so we don't report to executive, we don't report to the courts. We have our own responsibility coming from the Constitution. And ours is oversight. It's not to execute. We don't get into that space. We have to play oversight. And in this regard, we play oversight on every body, as long as you are within the Republic of South Africa. Hence, we are called the Parliament of the Republic of South Africa. So you have to understand what our role is. And we report directly to the people. We don't report through cabinet or the courts. We report directly to the people. So issues that we're raising here are issues that are coming from our constituencies. We don't formulate issues. We are not allowed to do that by the Speaker and our authorities. We must raise issues that come from constituencies. Like, for instance, my constituency is here at Easter Refir, here in Cape Town. So from time to time, I engage people from there, raise issues, and then have to find a platform to raise them at the relevant level. I think, Chairperson, this was quite a very important engagement. We have got the economy to grow and develop. The South African economy is hardly growing, and you can see the impact. Serious issues of inequality, jobs, and poverty. I don't think even yourselves as banks, you are happy to operate in an environment where those 3 are quite very high, let alone inequality. Whether we are the second or we are the biggest in the world, but we are somewhere there in terms of equality. We have to find a solution, all of us, to these issues. Tomorrow, if these young people, I saw last week doctors who are graduates, Chairman, it was, I think it was in the Eastern Cape, and was it in Mpumalanga also? Yeah. So now, if we have got so many graduates who are unemployed, what is going to happen moving forward? We have to provide a solution in regard to all these challenges. So what we'll have to do, colleagues, moving forward, we'll have to have another meeting, Chairperson, with the regulatory bodies. Now that we have had this meeting, we must have a meeting with the regulatory bodies to take this discussion forward. National Treasury. There is a coffee bill. Since I became a chairperson of this committee,
I have had a coffee bill. I'm not sure whether when is that coffee bill. Even today, you had somebody talking coffee bill. I'm not sure whether it will come to this committee or it will never come. DTIC will also have to meet the PIC. There are government institutions that are very critical in the finance sector. PIC is a major player in this sector. We can't leave them behind in this regard. DBSA, Land Bank, IDC, and others. So that you should not think that we are targeting private institutions. We want to meet all the sectors or subsectors within the financial sector. We are also going to meet your colleagues in the insurance sector, pension fund administrators, asset managers, because this is quite a very big sector. And I think finance sector is the biggest sector of the economy of South Africa. And we have a responsibility to work with you to make sure that there is growth in the economy. From there, before we compile a report, Chairperson, it might be important that we have another session with all the sectors, so that we don't just write a report out of this meeting or this engagement only. So we'll have to meet these other subsectors and then later come together under one roof with all of you. And you come with solutions. So this time we are not going to have a question and answer session. It will be to provide solutions as to what do you think can be done on a number of issues that we have all of us identified. And from there, we'll submit the report to the Speaker, which will be tabled in the National Assembly for debate and for adoption. Because at the end, the intention is to get the solution to inclusion, economic transformation, and building the economy of this country. So I think your experience here in Parliament today was not adversarial. We had to ask these questions because these what are the questions that were asked by members of the public. That you are there in Parliament, you are paying for this and that, and you are doing nothing. You go to Parliament and sleep. If you can find young people when we have got meeting with youth, they drill us and deal with us ruthlessly. What are you doing there? If they want to replace you, you are too old to be in Parliament. So we have a pressure, even ourselves, when we meet. You had the young man who is here next to me. The way he speaks is different with me. I'm about to reach a retirement age in a year's time, and he is still very far. So he speaks the language of his constituents. So that's that, Chairperson, that let's have a number of meetings to deal with all these other subsectors and the departments, and then later come and have a bigger meeting and then compile a comprehensive report that will be well informed by the input from all the subsectors of the finance family. Then when you present it in Parliament, really it will be something that have been well thought of with empirical evidence. Thanks very much, Co-Chair. Thanks very much.
Thank you very much. I still have the, okay, we know the owner. Thank you very much. I wanted to make sure we don't forget. I would also like to take this opportunity to thank the DDG and the team from the TTIC, Ms. Susan Mangole, and also thank from National Treasury, the DDG, Mr. Alexson and the team. And I thank the commissioner from the Competition Commission who's joined us, Doris Tsepe, and the team from the National Credit Regulator that has joined us, led by Ms. De Beer. and the team from IDC is led by Ms. Marumo. NEF is led by the CEO, Mr. Diamond. The National Consumer Tribunal is led by Mr. Trevor, as well as the Financial Sector Transformation Council is led by the interim CEO, Ms. Mahore and the team. They brought the big delegation like Standard Bank. We really appreciate because as you can tell that many of the issues we're touching have to do with them. So, and the reason why we invited this institution was to make sure that if there is any reference to them doing or not doing, action or inaction, we must ask them on the spot, good, what are you doing? Because this is what the banks are saying, or this is what the regulator is saying. Fortunately, I don't know whether there was some caucus session to see who's here, because we didn't want to introduce them when we started, because we wanted, if there was anything you wanted to say about them, we wanted it to be said today so that you can know where we are. You know, colleagues, you know, equally like Dr. Maswangani here, you know, there were a lot of skepticism and doubt why we're calling the banks. And I want to firstly thank all the banks, as well as the government entities, including the Reserve Bank, the Prudential Authority, the FSCA, even the Banking Association, and all the colleagues who are here. And in the main, people, you know, they were a bit uncomfortable. They thought they ran by the end of the day would have collapsed. Because Parliament is a lot of people who just rise through a show of hands, but I have had confidence in dealing with these colleagues that at least they use their brains to engage. And the reason why it was important that we engage directly is that we were tired of the middleman. We wanted to talk to you directly, and we appreciate the fact that, you know, we're anticipating, you know, we sit with lawyers. And so I asked him, so he said, no. I said, after our caucus, after our joint meeting, we said, no, we need the banks. So Andre doesn't say no to me, and he just goes around, he comes and says, no, Chair, I think we must invite them. I say, hey, invite the banks, they won't come. At West, they will bring cleaners there and other people, and so that, you know, and give them the uniform of the bank. He says, no, 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 let's invite them. So I thank you for your wisdom. Because, so I asked him, if they don't come, what's going to happen? He says, hey, there's a law here in Parliament to subpoena them. And when that happens, there's a lot of lawyers, it becomes too technical. So it's no longer a nice meeting like we had today. I said, oh, okay, show me that law. He showed me. I said, okay, let's invite. And then in the media, they were hounding me. Are you sure they're going to come? Are you sure they're going to bring the big guns? I didn't know that all of you are big guns. So you are all here. But in essence, basically what we are trying to, the point we're trying to make on behalf of the people of South Africa, majority, which our people is that, as the country, we are presiding over not less than 49 trillion rand worth of assets. Some are in the Reserve Bank, not less than 1.2 trillion. The National Revenue Fund, 2.1 trillion. The commercial banks, as we've been saying, we've got a figure of 6.7. You're bending the figure much more higher. The non-financial corporations for the listed about 12.7 trillion. The formal small businesses are listed about 2.5 trillion. The shadow banks about 3.2 trillion. The pension funds about 6.7 trillion. The stokvels about 50 billion. The GPF about 1.6 trillion. The SOEs about 1.3 trillion. The DFIs about 345 billion, and household about 11 trillion. So these are the assets that are available or dealing with in South Africa. As members of Parliament, we are very clear that with these kind of assets at our disposal, it can't be that majority of our people are not working. It can't be that we live in an unequal country. Inequality still persists. as well as poverty. So if we bring our heads together in the interest of nation building, we believe that a lot could be achieved by all of us. To ramp up infrastructure in South Africa, it is estimated that we need about 4 trillion rand. I believe that between the heads seated around here, it shouldn't be a no-brainer that we can have such amount of money made available responsibly, as we've been emphasizing, within the credit lines to make sure that we can build South Africa. The infrastructure is collapsing. You have people who have no schools, who have no homes, who have no bridges, they cross rivers. We are all here. It can't be that the only life we know is a life of Sentin and Camps Bay and somewhere, I don't know what is a nice place in KZN. But South Africa is in crisis. We need to pull our hands together collectively to try and ensure that we can build our country for the future generations who are going to be here. So colleagues, we welcome the robust engagement from all the members and of various entities, as I've stated. And we believe that these engagements are part and parcel of the continuous engagement, which we'll have to have so that we can work together towards a sustainable and just society where all South Africans can actually feel this freedom that all of us are enjoying today, and will have increased access and improved quality of usage, especially of the financial services. We must take measures which accelerate the transformation of the financial sector and address matters which support the real economy as well as support for small businesses as a matter of urgency. The structural constraints such as the high concentration levels, the high liquidity levels in sectors require bold and decisive actions towards accelerated inclusive growth. It is apparent that the current regulatory framework has not really worked in favor of the previously disadvantaged, who are excluded from the mainstream economy. In this regard, both the committees will consider and deliberate on the submissions that are going to be made, whether a comprehensive review of the legislation is required, where it serves as a barrier to broader transformation as deliberated here. Whether it be through access to finance, licensing of black-owned banks, legislating accountability and ensuring consequence management for anti-transformative and anti-competitive conduct by banks with deep assets of financial sectors, as stated. We need to find a way to have these assets reinvested in the productive sectors of the economy, with particular support for previously disadvantaged individuals. If we need to legislate, we will have to do so. We'll however be guided by the balance of evidence, but also it's not a process that we want to undergo alone. We want to make sure that we work with you, not just as a lobby group or as receivers of policy regime, but as those who are going to positively contribute to ensure that we're able to work together. As Parliament, as my counter chair has already alluded to, we will then have to establish mechanisms that are going to work to ensure that this sector broadly and other subsectors are also, engaged so that we can have a solution that is going to assist South Africa moving forward. We believe that a comprehensive report emanating from this engagement with a clear recommendation on the role of Parliament should be playing to enhance transformation in the sector, and in the process to be undertaken to hold sectors on a regular basis to ensure that there is general accountability. And this we want to make sure that we work with yourselves. These are the tasks beyond the prudential authority tick box that you have been working on since time immemorial. A broader engagement with ordinary South Africans on all the alleged differential treatment by the banks would also have to be established so that we can then agree what are the best mechanisms in which we can look into this and ensure that we are all in one, including the Sharia law that is being implemented, because I didn't know that I too can benefit, because who didn't want a loan that is interest-free, I've had my own fair share with the Investec and other banks. So you can imagine if I was a Sharia law, I'm sure I would not be in trouble. To determine the extent of fronting in the banking sector from compliance with the BEE requirements, because it's very clear that having looked into your requirements, and all of you are insisting that you are fully level 1, we believe that it's a tick box exercise that will have to now determine and ask, okay, Ntate Mokoena, where is Ntate Mdluli and Memas Chaba somewhere in this bank, so that we can truly say that there is transformation in the bank. Reviewing legislation that consider reviewing legislation that could potentially impede competition in the banking sector, such that as we see that the banks in the main, the first tier banking sector remains very intact. Very few banks are playing a major role. Any other person is a bystander, but the second and the third tier in the banking sector is really collapsing. As we say that one of the issue of immediate interest is the issue of Itala Bank, as well as the VBS, not the wrong things that happen that we cannot account for, meaning the banking as an institution of excellence, which belongs to the other tier of the banking system, which we have to look at. We also will also probably have to find ways in which we can have regular engagement with other sectors, including the insurance, the pension fund, and other subsectors, to assess the progress that are making in this regard. Because what has come up very clear is that actually the financial sector is just the same player. You know, these funds and these insurance companies are actually owners of the banks. So one way or the other, we have to have an engagement in which we can ensure that we can open up the space to more players to ensure that there is transformation. Also, devise means, even if through legislation or otherwise, that we can compel the banks to allocate certain portion of their loan book to sectors that will deepen the industrial base in South Africa, South Africa's economy, and accelerate inclusive growth. Access the developmental role of the Reserve Bank in addressing socio-economic challenges, particularly the high levels of unemployment. We've been arguing that, you know, we appreciate what the Reserve Bank has been doing, but I think it's time now they should consider, you know, expanding their mandate in terms of ensuring that they look at other things beyond price stability and so on. Investigate the extent of the implementation of the recommendation of the Competition Commission's 2008 banking inquiry, including the implementation of the first Parliament's report on transformation on the financial sector. These are some of the things, but as we say, we will be working with all of you as progressive stakeholders. We have not taken an attitude to be us and them. We want to work as one in terms of ensuring that we can bring about progress in South Africa and ensure that our economy can grow and we can have as much people as possible working and also participating in the mainstream economy. With those few words, would like to thank each and every one of you as members of the banking institution. Thank the Governor of the Reserve Bank for affording us an opportunity to engage with him. I'm sure we'll still have further engagements on other issues that have been raised at the level of policy. Thank all the colleagues from the bank and the DFIs and other institutions of government who are here. Thank all the stakeholders who have followed, and I hope that all of us have, in one way or the other, actually learned a thing or two, and we can improve and ensure that we have a better country. With those few words, I declare the meeting officially closed, and thank to all of you who have participated.
Recording stopped.